Good morning and welcome to the Breakfast Club. My name's Darren Hancock and I'm here today on Wednesday, happy Wednesday I might add, the 27th of March. Just going to make sure, double checking where I'm at. I hope you've all had an awesome night last night. Looks like the markets are doing a nifty bit of turning. We'll have to get to that shortly. Let me get over to Bitcoin's doing a nice little bit of running. I do enjoy that one for some steady trades back and forth. I do enjoy that. I'm not crazy about Bitcoin in and of itself, the whole premise of Bitcoin. Maybe I don't understand it fully, but I really do enjoy the reversals that are going on there. They're just like this, up and down, and give you tons of opportunities to just nibble some money out of the market. No long-term stuff, just some quick nibbling in and out of the market and start moving your account. Let me just make sure we're live here, and I bet Christian's going to be the first one through the door. He's my new Kurt, my Captain Kirk. There he is. Look at that. The husband and wife team are here this morning. Kitty and Christian are here. Welcome, both of you. You guys are the first two through the door. It's like you guys were the first ones to the dance. I like it. Welcome, you guys. Victor, buenos dias, my friend. Not even going to comment on that one. All right. Where do we go from here? All right. What else we got to hear? Harry, good morning. Thomas, good to hear from you, buddy. Caesar, good morning. Hans, good morning, everyone, and happy Easter. Happy Easter, Hans. David from Kenya. David from Kenya. Welcome. We got a good smattering of people all over Europe and Africa there today. That's good. It's excellent. All right, let me kind of get to this real quick because I usually go through my charts, ripping through the charts this morning. Again, we'll get back to NASDAQ shortly. ES only gave us the mean threshold of that. So whenever you're coming back into these fair value gaps, always remember that some of the key levels, obviously the high and the low, but the consequent encroachment of that BISI there, the midpoint, is an area of great sensitivity. You'll find that sometimes you don't get a retracement all the way back to these old highs. Sometimes you don't get a retracement back into the low of it. But the mean threshold tends to find the support level that you're looking for and then leaves from there, which looks like this is the case this morning. So we're getting back up into this order block. So if we get back up into that order block there, which is also Sunday's open, which is what we're hitting again, I'd like to see a reaction off of this and just smash down for the all-time low of the week. But it looks like yesterday might have been the low of the week, and we're going even higher on price. So look for the rejection block. Again, we're back inside this small little range from this candle here back to, well, this one hasn't been validated yet, but today I can just see this run back up into this order block. Ideally, if we just get a pop off the bottom of it, which is just slightly above that Sunday's open, and then we get a reversal back in to fill this. We'll see. If not, we want to see that candle give way its mean threshold, close on the upside, and then continue pushing higher for Friday. Well, we did get the Dow Jones gave us what we're looking for. We're looking for these old highs, retrace back into here, and eventually a close. But we did get the old high right here nicely. We've got a reaction off of that. So yesterday, that one tended to pan out where we wanted it to go. And now we're getting a run back up into this. We may just see just a pop above this fair value gap here, into the fair value gap, roll over and come back down again. we have a potential for halfway, and we have a potential to run back into this order block, bullish order block above us. It's low, it's open, and it's mean threshold. So there's multiple PD arrays inside this range we're experiencing now, and we've just broke the high of this order block. Yep, so this is a valid order block, so we're between here and here now. You think this is the range you're in, you want to come up to a premium to go down to a discount, so you're looking back up in fair value gap. Pull your fib tool from high to low. 50% puts you right back at the open of that candle. So that's where I'd be looking. And then looking for your reversal that we go over every day. So pushing higher, I think this was Derek's overall theory for the week. He's got his Tuesday low back into a very logical level here. Now we're looking for higher prices. So I do like this idea of pushing through this mean threshold or consequent encroachment of this reprice rebalance, this inversion. So pushing straight through, look for the mean threshold again, or again the consequent encroachment, whatever one you want to argue. And I want to see it start to climb above that, take out these highs, whether we just wick above them and come back into the range again, or start really pushing for this little imbalance sitting above here. So more upside prices, look for the rejection block again. These are all key areas you should be looking for a reversal pattern, rejection block, old highs. Then I'd be looking for a fill of this inversion fair value gap, looking for a reversal in that imbalance, looking for a reversal on the hourly or the 15-minute, whatever time frame you prefer to trade on. You look for that classic reversal pattern to get back in. So if the American dollar is going up, that puts some downward pressure on the foreign currencies. So we're looking for, again, the old low here, looking for this mean threshold to get taken out, which if this, we end up getting through the rejection block and digging down into this wick and take that wick out, then we're obviously going to start taking this lower candle here. These ones are pretty much inside this big beefy candle I like right here. The body is much lower, so look for the mean threshold of that one, which has already been hit. Then we're running for these rejection blocks down here. That's pretty much all we have left, unless we just revisit the mean threshold of this candle is pretty much the mean threshold of this one right here. Pretty close. So down with more downward pressure on the British pound. Have you found a reversal? Here's a reversal right here, right here. You don't get an opportunity to get in there. And then this is the potential reversal back up the other way. So keep your eyes on a potential swing point happening. Again, as the American dollar makes its swing, you guys look for your reversal swings in the currency that you're in. Keep in mind, by the way, don't try to pick the low. Just wait for the reversal to happen below a logical level and take that. If you want to turtle soup it, you really got to know where you're looking for to get a turtle soup right on the right time and price. And yeah, you got to be pretty bang on for a turtle soup. Otherwise, you're just guessing on the low. If you're not quite sure, wait for the reversal to happen. Reverse back into your entry point. Take that stop loss, put your fail safe in there, and protect your stop loss. Yeah, this one looks like it's running for these equal lows down here now, and a return back into this breaker down here. Yeah, look for a run right down into here and pop through that. Then once it's popped through here, look for your reversal pattern to see if this is the bottom, and then we get a reversal back into this range again. That range that you're in right there. CAD, American dollar is going to run out the highs. Well, we think it's going to run out the highs. This rejection block may be all it is. We come back up, tap, 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 and this rolls over. This now becomes giant wick again, and we start running back into this range. So again, look for your reversal pattern to set up. Here's a reversal, a good example of a reversal right there. Now is a great opportunity on a 15-minute. Stop loss sits right up here. Really tight stop loss. Watch this Canadian dollar. If that is the reversal right there, if we get a body trade above it on a 15-minute before it takes your stop, implement your fail-safe. So just scanning through your charts, you can see these 15-minute. Well, let me put that on a 5-minute. See the 5-minute? You trade back up right into it right there. That was a perfect entry for a short, for a run below these lows. You collect all those. We have a reversal back the other way below a low. Body pops. I don't know if that body, you'd have to zoom right in to find out if this body is above that candle. There's your entry for a long. You take out above these highs on the way up, back into the reversal to reversal pattern. I tell you, these things happen all over the place. You just got to keep your, watch what you're looking for, and you can get in and out, even, dare I say, counter trending. When you're in the wrong side of the market, you can still make money if you're steely-eyed enough to see that you're on the wrong side. And as soon as that changes, implement your fail-safe and get back in on the other side. Barring all your emotional, psychological stuff, of course, that tends to weave itself through all your trade patterns. As you can see, there's somebody on the Telegram channel there that is wrestling with a lot of emotional stuff, a lot of self-talk, a lot of talking himself out of a trade. And I feel for him, I really do, because it's, you get to that point where you see something, you engage in it, and then you, for some reason, talk yourself out of it, or you see something else, and your mind just can't hold on to the process of finish your trade, focus on that trade, finish that trade, stop talking to yourself in a negative way, and allow the trade to unfold, write it down, analyze where it went wrong. Because if you just talk yourself out of it because you got 101 things going through your head, then how do you document that? How do you find out what process it was that caused you to lose the trade? Did you actually follow your setup? In the end, you'll find you didn't. You just talked yourself. You listened to too much of your internal dialogue, and it ended up taking out your trade. Looks like New Zealand dollar is really hanging up on the bottom of that breaker right now. So we have a potential for this to continue to dive down into this fair value gap below us. If the American dollar continues to run for that little imbalance I pointed out at the top there, look for further downside prices and run into this fair value gap here and the daily fair value gap on this side. This would be a retest of that fair value gap. It's not an inversion yet. Australian dollar, it's finally going to run and take these lows out, run back into this inversion one more time. This is an inversion. Well, I guess it's a retest. We haven't run through it and back into it. So it's a constant retesting of this. Oh no, it is an inversion right there. Okay. So look for these equal lows and then the lows here. As you can see, the New Zealand dollar's finally given up all of theirs way down. And Australian dollar's really holding off, trying to take out all those lows. So if we start losing this low and digging down into this 50% of this wick here, and we get on the other side of this inversion, look for further downside prices for the next PDRA down here, which is the rejection block on the daily. Japanese yen finally took the high. I see that just wicked up there yesterday, took it, and we're pulling back in. That may be all that's necessary to clear out those little weekly highs. We consider that still relative equal highs, but that little pop-up right there, back into the range, just enough to clear out the liquidity. and then pull back deeper into this range. As the American dollar decides to run up one more time into that little, again, little imbalance we saw, we might say more of a significant candle, like a bullish candle starting to get up into that those highs. Again, look for your reversal. So if you look up here, look right here. You see this reversal? When you see this point, look for this pattern to set itself up. So when you get, when you say, oh, we've broken that high on the weekly, look at that, pop through it, and you say, oh, here's a nice little setup for this. So it goes, boom, comes through, find yourself your entry right here, stop loss goes up here, and as soon as the body closes above it, you're on the wrong side of it. Fail safe, whatever your fail safe's going to be before that high gets taken out. That's just for something that comes ripping through. So if you're 1% risk, it's ripping through. Watch Sunday's video we just saw, like the 24th. It'll explain all that fail safe and how to use it, and multiple different scenarios, how to use it on a CAM model, how to use it on a regular trade, this reversal, and how to use it anywhere inside your charts. But it's about a matter of knowing for sure where that reversal is and trusting your arrays. And the only way you're going to do that is demo the crap out of it and practice it, get really comfortable with that setup. And when the setup happens, and you test your fail-safe over and over and over again. If you get chasing butterflies and you're all over the place and you don't have discipline enough to do it, you won't get the results you're looking for. You got to stay focused on one thing at a time. One thing at a time. Test your theory. It doesn't work. Try a new theory. So oil, I think we get a run up into, where are we at, 19? So run back up into this inversion fair value gap here again on the daily. So we're going to come back. Now we've closed below it yesterday, come back up, tap it, and then start to pull away. So I like to see that kind of roll over and come back down. Otherwise, see how we've traded above it? You're bullish. Then it retraces all the way back, closes below it. Now you're bearish. Now you're looking for confirmation off of this. Look for a swing trade. Look for this swing entry that gives you that. As soon as the body trades below it and it comes back to it, get short. In this case, it didn't happen. You had a body trade below on this candle, and you never did trade back to it. So look for the breaker. Did the body trade below the breaker? Yes, it did. Trade back to the breaker? Yes, it did. You can get back on there. So if this one fails, this breaker, look for a breaker in here, and if that breaker provides you a level of entry, you can get short on it from there. Easy for me to say, I know, because I'm looking at this from hindsight, and you may say, well, it could have gone back the other way. Well, then make your fail-safe at the point where the midpoint of the breaker is. If it trades above your breaker or the midpoint, that's your fail-safe, and your stop loss sits above your breaker. It's really that simple. Your fail-safe is there to protect your assets. Your stop loss is there to go ripping through, but you're looking for a logical level. It should not come back through that mean threshold. It should not take out your breaker. If it does, then it's got a higher objective inside the range that it's in to come back to, which could be in here. Then reset, start again. You're taking smaller losses than these big losses. So where am I at? Yeah, okay, so we're looking for that and look for your reversal. Okay, we talked about that. So if that comes back up into, so it should be taking out these highs right here. If we come back into that fair value gap inversion right here. So watch this continue coming back up. Here's the reversal pattern we've run here. We traded above it right here. You trade back into it right there. Look at the bodies. And now we continue running for rejection block, and old highs. Or you pull your fib tool and trade your fib tool pattern that I showed you on the weekend. So there's many different ways to trade that reversal pattern. But even in oil, it's available to you. We've got a reversal to our silver. We've kicked off the inversion here. We're coming back down into this order block, so we're pretty much stuck. We got exactly what we were looking for yesterday. We kicked off of this inversion. We've come back into this order block. Now we're waiting to see what we get, kind of reaction we get off of here. Again, if you're in silver, look for the reversal pattern at these key levels on the higher time frame. If you find them and you see a reversal pattern happen, jump in it, take your profits as quick as you can, and save your money, because you're in a smaller, tight range here. And if you can leave a little piece on to do a runner, then great. Pay yourself. In these consolidated markets, you can still make yourself a decent amount of cash. And I showed you that yesterday when we were in that high resistance stuff. Gold. Well, gold's up through that 50% of that wick. Yesterday was a great example. We talked about gold getting to 25% of this wick, and if it snapped off of it, it showed weakness. So it literally came to 25% of it, snapped off of it, showed some weakness, pulled back into the range, and we stuck there. Then today we gapped up. You couldn't have seen this happen. Maybe you fundamentalist people could have seen that happening. Great. Now you're above you're right at 50%. So if it closes above 50% today, look for higher prices. And this gap now becomes a place that you can come back to find some support to go higher. Eventually I want to see that either come back and fill the top or the open here. Yeah, it's kind of or at least return to these old equal highs here. That would be the consequent encroachment of that gap, or imbalance, because only one side was delivered. Very thinly, I might add. Copper. Well, we're looking for copper to get back to our objective. It finally hit that, so woohoo! Finally got copper. So we're looking for a return into this fair value gap and a continuation today down to fill that. Back to the bodies now that we've got the highs, looking for the bodies to fill and see what kind of reaction we get off of that. Ideally, you'd like to see that just tap on it and continue working back higher. Again, look for your reversal pattern at this level, look for a reversal pattern on the lower time frames and start trading that back in a direction that supports bullishness. Until you get a reversal pattern back the other way, then you get out. Palladium, we're calling palladium to come down here. Same thing, it's filled, it's hit the rejection blocks already. It's hit the top of the old high, so just one more. Oh, it's already tapped it. So palladium's obviously filled its objective that we were looking for as well. Also look down in here for a reversal on palladium. Banks, don't worry about banks. You guys aren't into ETFs in different countries. I do like this idea of running back into this consolidation. We're back into a cam model, one entry here for an old high rejection. So you really 1, 2, 3, 4, 5 days you actually caught a nice little run back up to this rejection block and old high off of a cam 1 model. You're coming into a cam 2 model now, and keep your eye on this. If you actually close below this level right here, look for a return back into that level to go short. If you break this candle's high on a close, then you're looking for higher prices. So those are the two that I'm kind of looking at right here. I'd like to see that pop through here, come back in, find support, and head for this below us here. That's what I'm looking for. In corn, and we have a reversal pattern already happened here. So you see that little, I want you to see this here. See that little reversal happening here? We've swept these lows, swept that low. Reversal pattern comes up. We wait for a body to trade through it right here. We come back into it, tippy-tappy, and you're off to the races. You start running for the most recent high, back to an old low, come back into the inversion or the consequent encroachment of this SIBI, run for an old high, and then if it reverses back, pay yourself at these rejection blocks and old highs, old lows, order blocks. There's so many in there you guys got to keep an eye on in order for it to pay you. If you just keep aiming for up here and you're skipping all these PD rays and you wonder why it came back to you, it did not fail. You got greedy. Sorry. That's how it works. That's a daily chart. Always be prepared to pay yourself and move your stop loss accordingly. Coffee, I don't see much in coffee. Consolidate. Consolidation's good. If you can get back into this here now, the bottom half of the consolidation for a CAM 1 model entry for a run further down. Look for paying your, oh, this has already paid itself here. Inversions over here. No, haven't got much for you for live cattle. Coca, it's on a run. Lumber, consolidation. If we can pop back into it before running into the rest of it, that'd be great. Get your CAM 1 model for a run back into mean threshold and low of that lumber. And we have your, already have your swing point right here. So the body's traded below it. Your inside lumber, or sorry, lean hogs. Lean hogs is looking good for a short. Right up there, right off that spot right there this morning. Lean hogs. Now go down into your lower time frames and see if you see the reversal pattern. Take the reversal pattern for a run back into rejection block, this old high here, and catch yourself some contracts and lean hogs. With that, let's get back to here. And we got it with 2 minutes to spare. So look right here for mean threshold of that candle on the daily. Well, it's a 4-hour candle. So I'm looking for a reversal pattern to form right in here. And if it goes through that, then I look for a reversal pattern to form up here, and then up there, and then up there, and then up here. There's all these PD rays. So I'm just waiting for that little reversal pattern to happen, kind of like this one that happened here. So the body traded through it, you came back, you didn't get inside it. This is that rule we were talking about. If you have 1, 2, 3, depending on how many fair value gaps you got, if the candle trades through all of them at one time, go to the last one it went through, and as it comes back to it, there's your reversal. So that's just something I'm working on in terms of if you get a reversal pattern that forms and you see this big bold candle that rips through a whole bunch of them, you think, is it going to come back all the way into here? The option is to take this, again, 1% down here, maximum loss. And if you trade above that old high again, then move your stop loss right up to break even and take it from there. You guys, there's a lot of guys chatting away there in the Telegram channel. Here we go. Right off that break, that mean threshold right there. See that? So this is what we're looking for right here. Sunday's candle one more time. I want to see that just hammer down now. I'd love to see this just exit right out of here. Wicks, some of you people are wick people, and that's fine for you. I like a body getting below that. Three, 2, 1. There you go. There's your body below. There's an entrance cell. There's an entrance cell. Take a pace there. Pay yourself, and we'll do the same thing again. So, if it takes off now, oh well. Just building a buffer. This is where you go, oh, you should have stayed in it, man. There was the reversal. Now, should I be upset that I got $100 sitting in my pocket now? I know it's demo money, but that's the point. You trade your... Was I stressed out? No. It gave me a perfect entry and took me right down to $100. So I took these lows, took $100, moved to the sidelines. That comes back up now. Great. If it rips all the way down to the bottom, I go, oh, look at that. I could have stayed in that. I got $100 in my pocket, though. Yeah, maybe not your way of trading, but that'd be like 100, 200, 300, 400. It works. Those reversals work, I'm telling you. You got to trust them. Don't talk yourself out of it. Follow your rules. I only had one lot on there, so typically you take one off there, one off there. If you got 5 or 6 lots or something like that, I had to take out one because that's the rule, to take something out for me here. So if I got 5 or 10 lots on that, you just took out one there, you took out one here, and I'm moving my stop loss behind this, managing it. So you're either using the PD arrays, you're pulling your fib tool here to manage this on the way down. Yeah, this is where I start looking at these as potential reversals now. So I wait and see, because we've got so many of these gaps now. If you start trading through them on the opposite side, now that's a reversal back from swing 1 to swing 2. How's that little delicious run? Hey, this is what we're looking for, a nice big pound down now. Good morning, everyone. Thomas, Hans, David, Pumex, good morning. Mohammed, good morning from Germany. Hello, sir. Joselle, are you doing Dow today, sir? Nope, this is NASDAQ, and you just had a perfect entry right here this morning. If you've taken it, we were talking about this just before it happened. Then when it happened, we took a trade for $100, and had to put more on it. We would have been scaling out all the way down here, just chuckling to ourselves about how wonderful that setup at a particular array. This is what I wanted to point out this morning, and it was a delicious way to do it too. So looking for that mean threshold on a 4-hour candle, you're looking for the reversal pattern. We saw that forming right here. As we were discussing it, it was forming. Finally closed below us. Then when you literally saw me pop in right here on Sunday's reversal candle. Sunday's open, look at that, right off Sunday's open, right off the mean threshold. We get a confluence that says, hey, look, we're going lower, and we got it. Clearly I'm not still in it, but we got it. I didn't put enough leverage on it so I could scale out more. I just made it to my first scale out point, but whatever. You get the point. I made it clear. I hope you understand how clear that was. Young, good morning. Been watching GU since 6 a.m., 6:30. Go make some food, and next thing it's already gone. you gotta be staying on there. Look for a specific time and price. Now, what was the time? Look at that, 9:30. Right at 9:30, it says, look, here's your setup. I'm opening up the markets, and ba-boom, right off 9:30. Love it. Good morning, Niv Trader. Happy Wednesday. About to go green on weekly. It's your live lagging. Yep. Yes, the live lags a few seconds. Go to the wheel at the bottom of the, there's a settings thing there. Click that and make sure that you've got your quality auto. Turn your quality to 1060 over 80 instead of the auto, and see if that helps the lag. And I will go, that's something I wanted to check with you too. Man, I wanted that to scream down, and sure as it ever screaming down. That is awesome. Now I'm looking for definite low prices. I'm looking for those lows. I'm looking for this just to blister down today. Just a rip on down. Just keep coming. I want to see that just turn into a big freaking bold black candle or blue candle come ripping all the way into this fair value gap here now. That's what I want to see. Happy Wednesday. About to go green. There's a lag. Good morning. Lobo de Cash. Sup, homie? What's up? Fernando. Good morning, Fernando. Lambo, good to see you guys. Welcome, welcome. Did anybody catch that reversal? Anybody catch that and get in on that? Give me a high five if you see that. Give me a little Pumex high five if you see that. Look for the rejection block next. We've already taken it once, so I'd like to see that continue pushing all the way through here now. If this is just a simple pattern that you use every single time, the higher time frames, if you understand here what we're doing on the 1 minute chart, you'll understand these charts so much better, because then you can start to say, well, how am I going to get my perfect entry here? Well, your perfect entry would be the perfect reversal. Obviously, if you had this kind of thing happening here on the daily, and you say, there's my entry right there, there, and there. I'll take my 3 entries, put my stop loss above that, and I will wait. And if I get my perfect entry there, and I'm slamming down, this is day 1, day 2, day 3, day 4, day 5, day 6. You got 6 days of down candles. And you see this break to the upside right here. If we see this body break through here, come back, find some support at that, that's a reversal to go back into this range again. See how the body does not break that high? We just get a big wick off of it. Why? Because we came all the way back to breaker above an old high. Remember I was telling you before, if you can't get into this trade here, let's say you missed that one, you wait for a breaker setup. Here's a breaker. You wicked below it, open back up in it, and then trade it away. Then you say, all right, I missed that one. Well, here's your next one down in here, breaker, body trades below it right here, boom. Then it gives you one opportunity to get in on it there. You come back down. Are you paying yourself at these lows? You're gonna opens, come back down, pay yourself in here, move yourself into a stop loss break even, and then wait. Caught a nice live one down there at the back up in here. What do we got going on over here? Spartan Bear, you nailed that one. Good for you, buddy. Good for you. I was in longs from last night. Thank God I got out. You didn't need to thank God you got out. You got out because it was a logical place for you to get out, right? You traded your plan. You planned your trade and you traded your plan. You had a great place. And if you woke up this morning, you went, you know what? It doesn't look like it's panning out. I'm expecting to see, if I see a reversal, this is, if you were long here, this is a great example. If you were super long here and you woke up this morning and you looked at that and you went, ooh man, that could be a pivot point right there, right at the mean threshold of that candle. And you see this forming in here, you go, nope, if it breaks that, I'm out. My long is out right there. And you literally go short. You've caught the run all the way up, reversal, confirmation, and you caught the run down at a perfect time, price. That's a logical way to end your chart, end your run on a bullish trend. So if you're in a bullish run up, as soon as you see that, you go, no, that's a bearish reversal. And yet shows me, good, I get out and so let's say you have 5 handles going up here. You just say, at this point, as soon as you see that drop below there, you go add 10 handles right there. All of a sudden it comes up, boom, takes the 5 out, puts 5 in short. That's some serious confidence in knowing your PD race. Practice it. And when you nail it, call me up. I'll let you take me out for lunch. Tell me all about it. Me and some other people. We'll find some homeless people and take them out for lunch. Help them out. Help somebody out. Do something with all your riches. All that right now, you could have fed a ton of people in that. Just that little run right there. Craziness. Craziness. Hop back in at 938. Fair value up. Chris, back out at 20 handles. Good man. I think I took 20 handles out right there. This would have hit the low. No, I took like 10 or 11 handles out right there. I just took the low. I was like, I'll pay myself. So no reversal happening yet. So if you're managing this on the back end, don't forget your trailing stop loss is the fail safe. It's a dynamic fail safe. It's not like your traditional stop loss. Trailing stop losses are for people who are just starting out. They're not quite sure. They want to try and protect their stuff. So they set a certain limit and hope it doesn't come back against you. If you go over my Sunday's lecture, this is a dynamic trailing stop loss. And you know that when this PD array shows you an intention of coming back into the range it's just giving you, it'll tip its hat, and it'll tip its hat at a specific point. Watch Sunday's video and it goes all over that and how to manage that fail safe all the way down. What's the logical levels to put your fail safe at? Because those are the logical levels that if they fail, they'll go higher. Or at least back into that range again. So you want to see this just waffle around in here and start booking her right back down again. You know what we need, as Stoic Jack would say? We need to feed the algo. Our tradition, see that? It was just chomping at the bit this morning. It was saying, oh, you got carrots. I like carrots. Let me give him a little sampler because, he gets kind of upset if I constantly tease him. Spartanberry. A couple of confluences that might help others too on that reversal is that this is a weekly new week opening gap. Also took liquidity from yesterday's PM session. So there's all great confluences that support your continuation on the downside. So that's excellent. Thank you for that, Spartanberry. If you find, sometimes you need, I think it was for me, if I found 4 confluences that supported a specific level, and this is before I had the reversal, I would be like, all right, I'm pretty confident that that's going to be my turn point. Now you add this reversal pattern with all those confluences. If you have 4 or 5 confluences in the same spot like we've just had, then you get this reversal. Then the level of trust goes up. Your trading style doesn't change. You just think, okay, I've got really good possibility that this is the stop right here kind of idea. And you know that if the failsafe, if you put your order in right there and you say, look, I don't care about that one. I want this one because I want to absolutely protect myself if I'm wrong. This just says, look, I'm out of here. I was hoping I could get one more little run back in there, give me another opportunity to build a buffer. I have a way of trading this saying now, I would like to build a buffer. There's multiple hits down, come back into it again, multiple hits, come back in. You just keep paying yourself, pay yourself. Start your trade all over again with $100, $200, $300, and then all of a sudden it finally lets go. This was an open time that literally gave you one little tiny opportunity to get in, and off she went. So if we trade above this candle with a full body, you would close your short. Well, you're back to this breaker again. So you have to ask yourself, if you're coming back into this range, is this acceptable for you to start going all the way back up into 50% of the range? So For me, I just want to show you that if we do trade above that, look for 50% of the range. Look for a refill of this fair value gap again on this side, and start pulling your fib tool back on there. And then you have to say to yourself, how much am I willing to give up of that? We've already shown you that we're going to come back into it. Now you have to decide how much you want to give up of your profits. If you're fixed in your rules and you say, the moment it trades above that, I'm out, I can use that to go long, and then all of a sudden it goes whammo and slams against you, and you think, oh, that was the next price leg down. This is just a small retracement back into a breaker before it continues on the downside. This is where you start to talk yourself out, because you got so many different ways you can trade this now. What's your plan? Trade your plan. Decide now what you want to do with this and be happy with it. If it trades against you, don't punish yourself if it rips through on this and continues down. Take your $100, be happy with it. There's setups that happen all the time. Don't beat yourself up over it. We still have not traded above that inversion or that fair value gap. We're just retesting it. We've come back to order block. So look at this. It's already starting to give you that idea that, this is not a reversal pattern. This is a swing pattern for a continuation on the down. So if we take out this swing here, and then you come back below it, find some support at it, it's the same kind of thing here. You're taking out these little swing points. So you want to see this blow through here, body, trade back in. That stop loss would sit above here, and you'd be, all that there would just come back into here, find confirmation, put your next entry in there, and start your day all over again here with major profits in your pocket, and you'd be treating that like it's a swing point. And if it doesn't, if it trades against you and trades above there, then you can get back on board to run back into 50% of that. So watch this piece right here. Guillaume, carrot soup. Love carrot soup. Tristan, good morning. Dollar reversing on the 5-minute. Is the dollar reversing on the 5-minute? Is the dollar reversing on the 5-minute? Let's go to 5-minute. I'll tell you if it's reversing on the 1-minute. Yes, it is. We have the swing above. There's your inversion. Pop below it. Come back to it. Right there. Going short. You're aiming for a first piece here. 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 If you're doing cam models, you've got overlapping cam models, so don't trust going from one to the other, because there's no distance in between them. They're literally sitting on each other. So yes, very good. That's a 1-minute inversion starting to happen. A 5-minute, you say? Yes, there's your 5-minute. Now you have to wait for it to come back up in there. But you notice how 1 minute you already see it happening. You've already got it on the 1 minute. You're already in this trade. The 5-minute guys are at the bus stop with their lunch bag, still waiting for the bus to come back and pick them up. I don't mean that as an insult. I've been at the bus stop many times. That's why I like the 1-minute chart, man. You see this stuff happening long before the other people do. And you're collecting, you're already paying yourself on a 1-minute chart at these levels. If you're scaling out, and then if it comes all the way back up in there again, you get to start this whole trade all over again, having paid yourself all the way down here. Then when it comes back into the 5-minute guy and he says, I'm in, you go, yeah, me too. My pockets are full. I collected all the way down here. Now I'm going to get in short with you on a 5-minute chart, right? So you're right. It is a reversal happening there, Julian, but you can't get in on it yet because it hasn't come back to you. And you may not. It may just take off on you now and go, crap, I'm sitting there waiting for my entry. Didn't get it. But you would have got it here. Now, that's not to entice you into trading in a different time zone. It's just they're happening, and yes, you've done a great job of identifying that was a reversal. Look at that, come right up inside that thing again. We're not trading above it. We just keep bringing bodies up there. Fair value gap here. So you're between this candle here and that candle there right now. You want this to blow through here and keep pushing down. You want this to become support. If we get below this, that becomes a senior, that gets promoted to a senior array. Look at the rejection block. Yeah, eat through it. You want to see it just eat through all in one candle. Just go high, open, mean threshold, get all the way down into here. That'd be a nice little chew right through it. Then that becomes insignificant. The more you chew into it, the less likelihood it has of providing a level of support. If it does, if it comes back up, look for this guy to, there we go. It's looking for some carrot juice. That's what it wants, a little carrot juice. Into rejection block, it could just kick right off of here and come all the way back up into order block. Consolidation. Always look at these rejection blocks as an opportunity for you to go, have I paid myself? Ooh, come and kiss the carrot. Kiss the carrot. I feel like this is manipulation. Is it? Don't talk yourself out of a trade, Mohammed. Who cares if it's manipulation? If you're in it, wait for this reversal to happen. So now that we get this run below here, if this breaks to the upside, now that reversal you had there is here. We've swept these lows. If this closes above, there's your new reversal to run back up into a higher run. So watch. If it doesn't, then you can still say, I don't care if it's manipulation, I'm on it. I'm taking the ride through the manipulation conjunction junction. I'm on the manipulation train, man. I don't care. Because if you're saying manipulation in the wrong context, you're saying, I'm talking myself out of a trade. I want this to be something different instead of going, I found all the signs that say this is going down. Call it whatever the hell you like. I'm catching that train and I'm on a run. Here's your, if this is manipulation, then we're having a grand old time. See what I'm saying? Don't let the terminology take you out of a trade. If you're in it, stay in it until you get proof that we're going in the opposite direction, and we're not. We're still going in the direction we're going in. Now your trailing stop loss is moving to here, because that guy there, if you break this, if this becomes a fair value gap on a swing and we break above it, then it becomes support for a continuation on the upside. So my trailing stop loss is between here. Sometimes it's here, sometimes it's here. Depends on which one provides you the, where does my reversal happen? If this becomes the reversal, stop loss goes above that right here, and that becomes your fail safe right there. If you break to the upside, come back, tap it, you're out on your shorts and you're waiting for your long to happen. This is how you manage it on the back end. And look at this next price leg coming down. See that? We talked about this being the price leg, and it's, look at the manipulation. If you want to look at it from a manipulation perspective, I just say, how about this for a price leg down? Oops. That's my objective right now. We'll do it over here. I think it was my buddy. Show me that shift key. See, now you're sitting right here. That one, so you're sitting here, so you're thinking, if it trades above this, comes back to it, now I'm going long. So that's where your dynamic stop loss is following you down. And you're looking for this as the next price leg, and when it hits it, what is that here? See how, look at this over on here, and you go, okay, well that's this, we're going to take this low out, which is right at the carrot. Now if we take that low out, again, look for your reversal pattern. These are key levels that you may get a reversal back into this candle right above you here. So there's an opportunity for you to catch both sides of the chart. Don't trade it, watch it, put it on paper, mark it out, take your sticks. Here, I call these sticks. Take these sticks and put them on the the yard line and start marching them back down, and watch and see if this doesn't pan out. And if it doesn't, point it out to me. Get on Telegram, put it on a screen capture and show me, and I'll show you where you either missed the interpretation or you're right. It's a glitch in the matrix. And hopefully I'm showing you this as a very clear, oh man, my live trade's killing it right now. Oh, I better put that there. Pop, pop. Using those little crappy MT5 charts. Let me change it. You don't want to hear me popping that all the time. Delicious and nutritious. Lower the cash. Tacos. It's Taco Tuesday or Taco Wednesday. Aiming for yesterday's low possibility. Again, two different ways. If you're a front-end trader, so you trade and say, as soon as it hits that low, I'm out. That's good. That's a front-end trade. I entered in here. I'm exiting there. Done. Move to the sidelines. High-five yourself. Take your wife out for dinner. Take your kids to a baseball game, football game. Take them out. Have a special event that they'll remember for the rest of their life. Find an opportunity now to go have fun with your family if that's your objective. And you've paid yourself all that in one day. That's huge, huge. You've paid yourself a whole week's worth of wages there. That was $100 there with just one lot. Imagine what would be. I'd be $1,000 down here, or close to $700-800 right there. I don't know about you guys, but we got one guy in here. That's like a week's worth of work for him. I'm working his ass off, working his butt off, and there's people in here that's like 2.5 months worth of their wages. Crazy. Crazy. The freedom. Imagine the freedom you can have if you recognize these reversal patterns at specific times and you catch them, and you're making a major, you'll feel like you've robbed a bank of demo dollars, that is, because we only trade demo dollars. So those of you who say, yeah, this is a demo balling, if this just didn't happen on your live account, you're missing the point. You're missing the point. The point isn't whether or not we're trading live money. It's whether or not you saw this happen on your live account. Did it work? If you've got a live account, did it work? Did it work on your funded account? Did it help you with your challenge? Did you pass your challenge because of that? You recognize that? If it didn't happen on your chart, you need to move over to TradingView. I'm not manipulating. This is live data stream. I'm paying for this. You guys are getting this. I'm not even trading on this. I'm just demo balling it, but I'm paying for live data so you guys can see it live. There's no manipulation. There's no delay. You're getting it right from CME. Now, there's no reason why you should be in any stress here. If the stress that's in your gut right now is because of greed, you need to journal that. You need to identify that. Look at the range you're in right now and say to yourself, what could be a feasible place for this to return to? As this could be a run all back up inside here before it runs back down. Are you happy with it breaking a discount array to run to a premium array to break down? Or are you saying as soon as it clears that one on a close, I'm out of this trade? Because that's where my stop loss is sitting right now, my fail safe. Stop loss is here, fail safe is here. The moment it breaks that low, you could move to here and wait for your next setup. Oh, welcome to the end of your price leg. Ding. That second price leg, you could be done right there at that point. I'm okay with that. You took the low out. You're coming back for this one now. I'm looking for all this juiciness down here. And ideally, I want to see this run into April now. Yes, I do want to see it run into April all the way down here. I'm going to put it out there for you guys right now. I want to see it come all the way down into here. I want to see this low get taken out for April, or at least blow through this thing here, get back into this order block. I want to see us get right through that thing into April, and then April into May, run back up and blow these highs out. But this, I want to see this dig down deep, 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 my friends, deep. But that's just what I want. I don't always get what I want, but if I have enough carrots, I'll get there. That's my dream. I'm a man with a bag of carrots, and I've got a dream. Look at that. Keep kissing the carrot. We can get rid of this now. Now, remember when we said for your stop loss goes here, there's your fail safe. If it closes above here, you get out. Now you've got a new one. If this one closes here, makes a fair value gap, you got 49 seconds. If it closes there, then you move the first one, this one here to here. It's dynamic, fail safe. Your stop loss is above you for a dynamic run through you, but also your fail safe is there to save you before your stop loss gets taken. Again, saving your profits. That's managing it from the back end with the fail safe. Again, if you don't know the fail safe, if it's new to you folks, then go into Sunday's video and you'll see me explain in detail how to use a fail safe, how to apply it in any asset class, and with CAM models. And if you don't know what CAM models are, we have a video on our thing there saying what the CAM models are. Oh yeah, this is awesome. I've been waiting for this for a while now. This is excellent. Man, was he right about that. Lambo, are you in here? Does that look familiar? Do you remember seeing that? Is that not a video you've been promoting on our Telegram chat? This thing right here? Is that not like right from the horse's mouth, right from ICT himself? And that is a video from a blast from the past, man, and it just manifested like the Dickens. So, I don't know if you saw that, Lambo, but thanks for sending that video on to remind us, because that's been a perfect one this week. I've harvested a lot of carrots. I am harvesting a lot of carrots. Way to go, Fernando. My biz. Does SMT no lay into this at all? Oh, play into this. Does SMT play into this at all? We're working on SMT stuff right now in the Telegram channel. That's not that I want to try and encourage you folks to keep coming into the different, I've seen even people having these discussions on there about, you should join Discord. I have a Discord account. I've had it for years now, but I've had 2 people on it. And I don't believe in getting all you people that are out there keep jumping around on new social media platforms. This one, that one, this one. Look, I'm on like 4 or 5 different social media platforms right now, and to try and manage them all is crazy. So you get me on YouTube, you get me on Telegram, you get me on Facebook, and you get me on, for those old people, you get me on Facebook, and you get me on X, and I'm on Instagram, but that's all my art stuff's on Instagram. All the art stuff I've ever drawn is sitting there. That's my art thing I like to go on. So yeah, there's that's it. I'm not going on any more social media platforms. If you don't like the ones I'm on, and I use Skype, and I use the other one that's incorporated into the computer, and sometimes I'll use Zoom. I don't like Zoom because it's only good for half an hour, and as you know, I like to hear myself talk, so you get more than more than in Skype. So I use Skype. So yes, there's probably other better social media platforms out there, but I'm not going to keep putting that on you folks to keep jumping and following me around from one social media to another because somebody likes it better. Ugh, I don't care. You get me the way I am. I'm 58 years old, going on 59 this year, and you get the old school. Hence the reason you still have Skype, or no, you still have Facebook. That's why you'll find me on there. So that's the social media platforms I play on. So you can catch me there. If I've got something new to share with you guys, I'll share it on the Telegram channel. The Telegram channel is more of people who are coming, my subscribers that want my time after the markets, after I get off here in the mornings. I usually pop on there and answer questions and have little chats and stuff. And if I share some interesting ideas, I'll share them there. And then eventually they'll make their way onto here. But I like to share ideas, and lots of people have some cool ideas on there. So I'd say it's more of an exclusive thing. It's all free. Nobody's paying anything. So, but you have more of an exclusive place to find new ideas, and we're kind of thrashing out. There's people in there working on their psychology, on how they're going through their trades. You got people that are coming in with some from other places like Hydra, other traders out there that share their ideas, and they're picking up some information, they're sharing it on there. You got people that are promoting their own channel on, hey, this is how I did my trade. And if you want to follow them, I got no problem with that. I try to jump on other people's ones to get you to follow me. If you think you got something valuable to share to people, I'm in it. If you're into just shameless promotion and trying to get people to buy memberships and shit, go somewhere else. If you're there to help people, I don't care what you do, but you better be there. With ICT stuff, if it starts to get diluted and you start getting into other people's theories and stuff, I'll say nope. You got to keep it ICT. You got to keep it as clean as you can, ICT. Not just a bunch of other people's interpretations of ICT. Keep it as germane to ICT as you can. That's why we use the ICT index.io. If you ever have a question that you're not sure about, go there first before you come to me, because you'll get it right from the horse's mouth. You'll get the video, you'll get the placement, you'll get exactly what he's talking about. You'll see it and hear it, and you'll get it in text. Exactly what Michael describes and how to answer that question that you have. Better than I will. See this here? If we have more downside, we're in a silver bullet setup right now for a short. We don't want to see this close above this. If you do, you have to ask yourself how much of this. We have a discount array and a premium array inside this range. Are you okay with letting go of that discount array to go up into your premium array to tag this order block and then reverse? If it doesn't and runs through it, you gave up. It turned right here. Just be prepared to see that it did turn here and that you are willing to give up that. So if your fail-safe is sitting right in here on that high, if this fails, you get out there and you've closed the rest of your trade today. You're done. Move to the sidelines. If that's a method you're using. I'm not telling you that's how you should trade, but it's a method for those of you who go, I don't know how to manage the back end of this trade. I can manage the front end, and I go, look, I'm missing out on opportunities to go much, much longer. Well, here's a way to protect yourself in case price does a reversal. It will reverse on this. This will be the reversal. The same thing we've pointed out multiple times here and in other directions. As soon as this happens, you've got your reversal for at least inside this range. So if it reverses, it'll reverse back up into a premium array into here, 50%, pull your fib tool. There's ways you can manage that just coming back inside that range. There's, again, go to Sunday's video and you'll see how you can manage this multiple different ways. There's 3 ways you can manage it. One is from the back end, one is from PD array to PD array, and the other one is through the fib tool. I want to create a video saying, let me fib to you. Should I fib to you? Telling fibs. That'll be the title. Let me fib to you. Derek, good morning. Yeah, I think that explanation is perfect. Is this also happening on your real account? Because if it is, then this demo trades are legit. Oh, thanks, Derek. Yes, thank you. Lambo D, we are in SMT right now. NQ lowest. So, if NQ is lowest, on what we were kind of discussed last night there, Lambo, look for that now. Look for that now, what we discussed last night. And if it doesn't happen, wait. Wait, because deliciousness is on the way, my friends. Oh, I feel so vindicated on a trade I took a few days ago, like last week. I feel so vindicated on this right now. This is awesome. Watch right there. Now ask yourself, how much of the range do you want to be in? If your stop loss that was here is sitting right here, and that's your, if it breaks it to the upside and starts coming back up, how much of this do you want to, are you willing to give up? So watch. That's the reversal pattern that's forming right there. And see how much it gives way, because then you have to look for a next break above. So if it's here, pay yourself at order block. That's a breaker. You want to see that provide a level of support. See how we've traded above it, tapping into it. Now we should start see it coming back up into here. Rejection block. And how much into this range are you willing to let that go? Interesting, hey Lambo? So if it just comes up to rejection block right there, I want to see that. Just do not want to see this mean threshold get closed above. Again, you got further confluence that you're coming back up higher now. And if that's all you're coming back to, that's why I say if you start going long on this right now, you're paying yourself at the PD array above you, which is this guy, that guy, that guy, and then you look for that guy. If your stop loss is sitting up here and you say, I'm just going to wait for my stop loss to get hit, I've pulled it right to here, then you're about to get hit. But just know it formed right here. You had an opportunity to see it right there. And if it takes off all the way back up into here and really puts a squeeze on your stop loss, if it takes you out here, you say, okay, good, I'm done. I move to the sidelines now and I wait for another reversal pattern for me to continue on the downside. Or you decide to play strategically, more advanced stuff, and you start to say, I've got lots of profits in here right now. My stop loss is going to sit above here. So if this one fails, inside this, I look at my range, pull your fib tool from high to low. So from here, if you're using your fib tool to manage this trade now on the way back, pay yourself at 50, move yourself to break even. If it hits 62%, move your stop loss to 50 and pay yourself at 62. Use your fib tool to pay you on the way up. This is a level of detail. Now you look at this breaker as a level of support right there, tippy tappy, and then go higher. See how the body's broken above this one as well now? Further confirmation that you've got the upside ramp. So it can come all the way back into here, into this breaker, and then continue pushing. Now you got to ask yourself, 50%, 62%. Is this an optimum trade entry now to go short? Pull your fib from here to here. And then if it starts to blow through this, pull your fib from there to there and look for your 50, 62% in that range. So right now, this reversal has paid you dividends on the way up, counter trending it. We're expecting it to keep coming back down, but this is counter trending it, knowing how to catch that, get in, go long, pay yourself here and here, move to quickly to stop loss. And then if it reaches to that fair value gap edge right there, pay yourself. Quick. You got to see the, if you don't see the PDRAs and you think I'm just form fitting this, then you're not looking at the PDRAs, and you don't see the same PDRAs that I do at opportunities to pay yourself. Because all the time I'm putting money in my pocket and you're doubting everything that I'm doing. You stand there with doubts that somebody else stands there with a pocket full of cash and never risked anything. They got out of their risk as quickly as they could, and they're just nibbling. That may not be your trading style. I don't want to nibble at that. I don't want to be stressing over that all the time. If it's stress, then don't do it. See how we come back to that breaker? You can come all the way back inside that breaker. Now for me, if that breaker gives up on the downside, see this little fair value gap we've got forming here? That thing right there, this thing right here, you're literally between these two right now. So you got to be, we've swung that high. Now you got the reversal. Now we expect that to continue back down. If we trade below it. If we don't, we just keep tapping it. Then it's the same thing as this. We just trail it all the way down. Same in this one. We trail it all the way back up using our fail-safe or your fib tool. Well, again, whatever method you want to use, or your own. I'm just offering stuff up to you. Off the breaker, running. Pay yourself, pay yourself, pay yourself. We're counter trend trading here, folks. You're trading counter to where you think it's going to go for the day. But if it doesn't and it keeps going back up, you're going to be saying, damn, I caught it right on the reversal. I caught it on the low. Lambo. Just what we were discussing last night. Right? It's freaking magic, man. And this is just, and I'm not trying to be all, I am kind of being a bit mysterious about what Lambo and I were talking about last night. It's just a theory I'm working on, and I don't want to bring it to the table here until I'm sure that it's a solid gold play. And this is us just trying it out, or me trying it out for the first time today. So I will, if it starts to pan out, I'll be more than happy to share that with everybody. But you get the exclusive kind of sneak peek in the Telegram channel there. So you want to see this breaker give way. I want to see a big bold candle get all the way through here, validate this area to the downside, break through the breaker, come back up inside the breaker and reclaim this little fair value gap you see right here as an inversion. And then you're going to go short and think short right now. Then you keep your stop loss tight and watch, because this is just a reverse back into this spot right here, and then continuation to the upside. That will be your silver bullet entry. See how this first 10 minutes, if you took this as your silver bullet entry right here, here, or here, you got short, you better be aiming for here. Pay yourself at that point. A lot of people just keep thinking, they look over here and they get greedy and say, oh, it's going here for sure. If you're trading on a 1 minute time frame and you're entering on a 1 minute time frame, unless that's your objective for the day and that's your perfect entry like it was up here, then you leave it alone. You don't care about these little retracements like this. They don't matter to you, because you're trading on a daily basis. You're just entering the perfect entry on the 1 minute. Then after that, you close your books, you move this thing to a 5 minute and manage it on a 5 or 15 minute time frame, and you wait for, you know, your 15-minute people didn't even get an opportunity to get in on that reversal this morning. See that? 1, 2, 3. It blew through all of them. You didn't even get a chance to get there. But you see how they got an opportunity to get on it right here? Right off the breaker. See, if you miss it, get your breaker, and you can still be in this delicious run down on a 15-minute chart. So don't sweat that you missed this. There's always an opportunity on whatever time frame you're on, hopefully, to catch the breaker. That's a real safeguard. That's when you go, oh, this is definitely going down. Once that goes ripping right through that breaker, comes back up, I'm getting in on that short. Where am I aiming for? Where's your next objective in your range? Breaker. Breaker to breaker trading. Pay yourself some there. Rejection block, old low. And let the rest run. Or pay yourself at the next one, the next one, the next one, whatever method you want. Look at that. Oh, look at that. Look at that deliciousness. Let's go short right there. And the stop loss will go here, so if we're wrong, we've traded body below this now, so I'm expecting this to trade. We traded into the break. I want to see this get through the mean threshold, though. I don't want to see this. This would have been nicer if it would have been a bold candle all the way through, then come back and tap it. So we'll wait and see. You want to see this? Use your failsafe. And this is the candle that the next candle is the one that we talk about in terms of how do you manage your failsafe. It's all on this next choice you make right. Oh, you don't have to worry about it right now. You're still good. You still have not traded above that thing on a close yet. You wicked up there, that's fine. Now for me, I start to say to myself, what's logical here? Do I want to see it run all the way back up here again? No, it's already come back up into the order block. It's run through. It's tapped into the order block one more time, and I want to see it start coming back down. So I'm going to start moving my stop loss tighter, because I should not run all. If it comes up to rejection block, that would be the last place, or the mean threshold is the last place I'd like to see that thing tap. I want to see it get out of here now. I don't want to see it fumbling around in here. Where's my carrot? Let's give it some motivation. Now, as soon as it takes that low out, pay yourself. I've only got one on here, so I'm not going to pay myself this time. So you take a piece off, move yourself into right above here, because you don't want to see this. You've seen this hit up there multiple times. You want to see that fair value gap hold price right now. There's no reason it should run all the way through you again. So pay yourself at the rejection block. Look at the look at the range you're in now. Pull your fib tool, wait for 50%, whatever you want to do. Like from here now, you could start trading this. Hits 50%, pay yourself, move to break even. So because I'm managing this from the back end, I'll move it right into break even right there, right now. There, you'd pay yourself a portion off there. I've only got one. So pay yourself a portion there. And get ready, because if it snaps back through you, sometimes you get the optimum trade entry over 50% and then continue higher. So you want to make sure you're protecting yourself before that happens. And then if that hits 60%, I'm going to pull this right down into, oh, I don't have a stop loss anymore. Where's my stop loss? Ah, crappy. Whatever. It's going to take me out. It's coming right back into the edge of that right there. It could come back into that there. So I don't want to see it come back there. So we'll let it sit right there. You can sweat it out. See, there's no stress. I go, oh, whatever. Wait for another entry. Perfect entry is right in there. So you can drop another one there. There's that 50%. You can get this. We're right back into this order block. See that right there? From one to the other. So I'm going to sit and wait now. This was just, this one here was the short to this one here. Literally traded you. Close it out at 50%. Pay yourself. That was 200 and some odd bucks you could have paid yourself just in that 2 minutes we were in there. How many of you guys get paid 200 and some odd dollars for 2 minutes work. So now you're saying it's between this guy and this guy. Which one is the most likely winner of this tug of war between going higher and going lower? And this is where you reserve the right to say, I changed my mind. I'm bullish, I'm bearish, I'm bullish, I'm bearish. You just keep flipping back and forth because of these things. And you're in a consolidation. That's what happens in a consolidation. You jump back and forth, back and forth, back and forth until you find the one. And when you finally get on the right one, you'll see it because you're already on it. You saw it. Right now we're bearish and we're bullish. We're both. More overall bias now is bearish. So I'd be supporting this one more than I'd be supporting this one. This is that padding I was telling you about. If you're trading this to this, you get out at 50%, come back in, enter your trade all over again, start again. If it comes back here, pay yourself again. If it comes back in there, start all over again. You've just taken $250, $500, and we still haven't got out of this consolidation yet. You buffer. You keep paying yourself. Every time it comes back into that range, pay yourself at 50. Pay yourself at 50. Just keep paying. And if you can scale out a portion, scale out, move your stop loss right into 50 the moment it hits 62. Again, this is just a method that I like to use. And I'm bearish. On my live, I'm still bearish. Amazing though, Dow went straight for the highs. SMT, Pumex. What should I do? What should I do to have my winning trades with size of losses and losses with sizes of winnings? LOL. You sound like Dr. Seuss there, Pumex. I have no idea what you just said. Similarities. All I have hit and rejected the daily bearish order blocks. Good morning, Simo. DSMT right now. Yes. We love that you are ancient. Derek and I are on the same level of, we're on ancient. We're in that above 55. Freedom 55, my friends. That's what we're into. Could be our reversal. Yeah. So now if we get above this on the upside, then this reversal that we came back to is more valid. So we have to get above that. So you're looking at a premium and a discount. If we get below the discount and come into it, then it's more bearish, obviously. And if we run above this one, get on top of it with a bull candle and come back and tap it, then we're more bullish versus bearish. Hopefully that makes sense to you guys. So you're really, we're sitting in limbo right now. So don't panic over your trades. You can move to the sidelines and wait for a better setup if you want. Or if you're sure, because you saw SMT divergence and this is what you're looking for to go long right there and manage your stop loss accordingly. See how the body trades above it right there? Body trades above it. Very next candle opens, comes back, taps it perfectly, and leaves. Rejection block. Pay yourself. Small little 1 minute, $50, whatever. Pay yourself right there. And manage this inversion now. Because if this reverses and comes back down, you're bullish or you're bearish again. Right there. You're in a premium of a premium array. Let me show you. See that? you're in a premium of a premium array, discount of a premium array, premium of a premium array. So you're banging around, and this guy is sitting right in the discount array. So if we go above it, come back, tap it, that's just going just below that 50% level, and then you're looking to run it higher. Now that we've traded below it again, now you're short to the discount array inside the range you're in. And you wish that you should have paid yourself that $50 right there. Now you're at break even. You're out, but you made another $50. Counter trending inside a consolidation. Yes, you can. You got to be quick enough to see it and fast enough to act on it and bold enough to act on it. I'm not saying you should, but I'm saying if you're watching the array, the algorithm, price action, it's moving from one logical area to another. Even inside this mess that you're looking at here, it's moving from one to the other. We just went from like array to like array, rejection block to rejection block in 2 minutes. And now you're sitting right in the middle of that, right near the 50% of the premium section, right there. Now you're at 50%. Where do you go? I don't know. So you wait. Just wait. We're in a consolidation. The CAM model people are just, they're just chomping at the bit. They're salivating right now, waiting for this thing to give them something they can jump in on. So CAM model people are just waiting. So why don't we wait? You made a whole bunch of money right now. You're sitting on you even made money in this little range here that we took out money at. And now you wait. You wait for something more delicious and nutritious to give us a new carrot soup recipe. I'll answer some. If you guys have any questions, just by all means pop them in that section on the side there. I am happy with $25 a day. A lot of money in South Africa. Lewis, man, $25 a day. You guys see that? He's happy with $25 a day. And that's a lot of money in South Africa. Man, $25 a day. It's humbling for me to hear that. $25 you guys pay for breakfast. You pay more than that for a breakfast for one person. He's happy about that for a day. Unbelievable. Amazing though how Dow went straight for an hour. NQ, ES have same form and downward move. Pumex, what should I do to have my winning trades? Oh yeah, we read that one. Similarities of FGM, good morning. SMT, we love your ancient ouch. Could be a reversal. Time to move the carrot maybe. Dave, I'm a fiber. I'm a fibber. Fib to me, Thomas. Daily fair value gap, Thomas. Or I think you should know something about me. I'm a fibber. I like to fib. Fib to me, Thomas. Fib to me, buddy. Niv Trader. Yeah, Addy, I have it. Has 50% of the fair value gap daily. Lobo Del Cash, I'm not as quick, bro. Trying to see them. Don't worry about it, Lobo. This is, again, I obsess over this stuff. I practice this stuff on my days off when the charts aren't moving anymore. Now that I've got Bitcoin I can play with, I sit there and I show you, like yesterday, how I trade one candle at a time, and I practice. You want to get, I don't want to say as good as what I'm doing, because anybody could do it. If you're an ICT person, you see exactly what I'm pointing out. I'm not giving you new PD arrays. I'm not making up PD arrays. That's how I see them anyway. And it moves to the exact things that I'm looking at. That's me trying to stay on the horse. I remember getting thrown off this thing. I'd put a trade on it. I'd be chasing every candle, literally putting live money on every candle, going in the wrong. Oh, it's going the other way. Click. Oh, no, it's coming back that way. Delete that one. Or no, I'm out. I've got to go back in this one. And I would literally do the chasing the candles. And I've done thousands of trades that way. No discipline, just literally. And then he starts teaching you more about order blocks. And then when I understand the PD array matrix, as you see, I am not into the SMT stuff. I'm not into the higher time frame stuff. I'm sitting here in a 1 minute chart trading PD arrays and inversion and fair value gaps. Everything he talks about in his PD array matrix, that's all, as you see, that's all I'm doing. That's all I am doing, and utilizing it to the point where I can make cash real quick. Take some money, move to the sidelines. Protect your money real quick. Once you get really good at recognizing them, all those other time frame PD arrays you got up above, those are just goals that you can aim for, and how you can do it on here. Some people say, well, yeah, you're not in the trade very long. Really? That wasn't a long trade for you? All the way down to when it finally broke right there to the upside? If you didn't close your trade out there right when I was telling you it was happening, if you didn't and you're willing to let it come all the way back into here, you're getting squeezed now. This is all lost profits. And you've had multiple opportunities to say, okay, I'm going to go long at that point. Oh, I'm going to go short at that point. I'm going to close that long out. I'm going to go short there back to this guy, which I pointed out before we got there. You start paying yourself at the PD arrays. As soon as you come back into the 50%, I told you to take out there if you're using the fib tool. If you're trading array to array, then you're trading to this discount array. I talked about premium and discount. There was your discount. You hit it. Now we broke above it. Told you about that. So we're staying on the horse. The horse tried to flip us off. We tried to go down, flip us off to go high, flip us off to go down, flip us off to go high. And we stayed on the horse. That's the whole point about studying this stuff. So that even in these consolidations, we still were able to snap money out of here and pay yourself inside a consolidation. Practice it. I tell you, I'm not making this shit up. This is all doable. Every one of you guys could do this. I'm an old paramedic firefighter. I'm not the smartest guy on the fence, but I'm up there with the other crows. Caw, caw, caw. Trying to tell you, come see me, come see me. We're all up here doing our live stuff saying, come see me. I will show you what I know. I'm just showing you what ICT has taught us. And this is what happens when you can obsess over it. It helps to have a little ADHD as well. Because when you hyper-focus on this stuff, I love being in this. Because when I get into hyper-focus mode, holy, I love this. Or sometimes I'm all over the place. I finish half a sentence and I'm on to another one. I don't look at ADHD as a problem. I look at it as a gift. All those years, all those wasted years in elementary and high school, stressing, not being smart enough, not being this, not all that negative self-talk I told myself. All those teachers that didn't think I would have amounted for anything because I was always the difficult person in the class. I was always the one that couldn't focus. I was running around talking to the girls all the time and couldn't focus. That's why I got my art degree. And man, sitting in a classroom drawing all day, it's great. When you could hyper-focus, it was great. You could come up with some great drawings. And then it was like, man, I can't make this as a career. My boss would have me fired no time. I was like, get out, leave that woman alone. Stop flirting with people. And back in the day, you know, everybody flirted. It wasn't anyway, it was bad. Let me get back to this. I'm going off on different tangents here. Let's move the carrot to the sidelines and wait. We're still bullish. So this guy's winning over that guy. We were hoping that that trend would continue down there, but we broke to the upside right there again. You come back inside, find support. We traded below it. Then we traded a buck above it right again. So you see how we're bearish, bullish, bearish, all in two candles. Then we went bullish again, came back down, found support at the top. We have another fair value gap in here. Swing point, breaker, order block, propulsion candle, come back up inside this and continue up to the higher, filling that fair value gap. You're inside this range now. You want to see if this order block holds. So those who actually held or pulled your fib tool from here to here, and you said, I was willing to sacrifice more of my profits because I think that would be the line in the sand, this order block, to continue on the downside. If that's the case, wait for your next swing point setup. And if you don't, then wait for the breaker. As soon as the breaker trades below that with a body, come back to it, then get short. And continuation on running back down here. That might be it right there. I've got some music playing in my head right now. There's no denying. I'm a fibber. I think you should know that I'm a fibber. I have had. I'm not this quick bro trying to catch it. You'll get it, Lobo. You'll get it, buddy. I believe we are in a YT 2022 model right now. We are still diverged. I must have missed it somehow. We'll go back and review it. Possibly small SMS retracing it down 50% of consolidation. You guys are way smarter than I am. Mate, you are playing football in high school. You were playing football in high school? No, we didn't have football. Football came after the fact. After I left high school, Sturgeon actually got its Sturgeon Creek High School is where I went to. They got a football team after the fact. Of a couple of years after I left, they got a football team. I was a track and field guy. I was into high jump. No discus or shot put. I was lean, mean, and I loved 800 meters, long distance, and high jump. High jump was my thing. I was in Pop Warner football early, like in the before high school. Oh no, it would have been in high school. How old was I? Just short of 18, so 16, 17, somewhere in there. Then realized I could get hit. I was like, well, this is a stupid game. In England, we don't hit each other. Terry Sullivan, hello, buddy. How's it going? How's the weather over there in Brighton? You're just down the road from me, mate. Just down the road. If the carrot doesn't work, could always switch to pizza. I mean, who doesn't like pizza? This is true. Thomas, but it broke structure to the upside, so it's not logical that it's going for the imbalances above higher. Yes, it's broken structure to the upside. So we have a break in structure to the upside. We know you break these highs here. That's a break in structure to the upside. When you start breaking these lows, you break it to the downside, right? So when you we got the slow little trend back up. We saw the reversal happening here, and then the reversal happening here. It came back. You're trading in between those two. Then you were banging around here. We're waiting for our setup. It finally popped above here, came back in, found some support, but did not get back into an opportunity right there. We traded up. We went bullish again right on that candle, and you have an opportunity to get in again here, and you're trading up to that guy there. See that little inversion? Draw it right across. That gives you your opportunity to go long again, and you're looking for a run back up into order block. Pay yourself right there at that order block inside that range. Quickly move yourself to break even, zero stress trade. That's how quickly you got to watch those. So if you get through here, pay yourself at the mean threshold and move yourself into profit. Now you're inside this range, that guy and that guy. You're literally there. So if you want to make some quick money, $50, $100, if somebody handed you a $100 bill, would you slap it out of their hand and say, no, I'm waiting for a whole pile of money. Keep your $100 bill. That's how you quickly grab your money. You see an opportunity, you see a range, and you go, ooh, I'm between those two. I'm in a discount. If it runs up to premium, I'm out. stop loss there, go, right? I swear one day I'm just going to trade. Just keep clicking trades so you guys can see this on a demo account. But I know if I do that, I do it because I don't care about the demo account. I have to be confident with my setups. And there's your premium array right there. Back to here. So now you see how it's getting smaller and smaller. It's consolidating between here and here. It's got to make a choice now. I've got to get out of here. I've got to either extend down to mean threshold, up to mean threshold. I've got to extend to rejection block, or I've got to blast through here and continue down. Now that I've filled that there, is my objective just to come back up to that order block and continue down. Then there's my next price leg down to right here. So I look at that and I always think, oh, if we blow through that mean threshold right now, I'm looking for push, push, push. Come on down. Now we get another price leg down. You'll see these patterns repeating, and you'll get better and better at recognizing where you think it's going to go. Did you say limbo or Lambo? Lambo's in limbo. Tapping the lower 1 minute, stuck, chuck, not surprised, needs a breather after that massive drop. That's an 8 hour at work in Morocco. What's 8 hours? Now, how much money that is? That 8 hour at work in Morocco's. Wow. On an ancient train with you, Darren. Add me onto the train, Dave. I love Dave. That guy's. You talk about somebody who's trying to learn this stuff and picking it up so quick, and he is. Macro begins in 60 seconds. Yeah, Dave, I've got much respect for you, man. You're really trying. I can see you're trying, and I love focusing my attention on people who are really trying to get this stuff, and they're asking lots of questions. If I can answer them, direct you in any way I can, man, that's nothing fills my beehive like that does. Count me in on the train as well, says Niv Trader. How's your risk to reward ratio? There is no risk to reward ratio. It's all managed through the 1%. Risk no more than 1 or 2% of your account, whatever that risk is. Wherever your stop loss is, your fail safe is what my risk reward is. And see Sunday's video to understand what I mean by that. My risk reward is not an R1, R2, R3. People asked me that question before. It is not, because R1, R2 is, to me, very restrictive, because you're saying I restrict my trade to a fixed level. And look at those candles and tell me if any of that looks fixed. None of it is fixed. It is dynamic. If you do not have a trade plan that is dynamic, and this is just my personal belief, I know it's going to fly in the face of everybody else's beliefs, but hey, it's my channel. So R to R ratios are simply a way for people to say, look, I did it. Look, I got my R model. But it had nothing to do with, you picked okay, let me put it this way. An R model risk to reward ratio is for people who do front end trading. Okay, so I've got my risk tolerance is an R1. This is what I'm willing to risk. And I'm aiming for an R3 down here. That's my fixed point. Great. If that's your fixed point and it's an R3 or an R2, R10, I don't care. Good for you. To me, you've shot through a whole ton of PD arrays and you've made a whole bunch of speculations on where you think that price is going to go. And to me, that's not this. This is what I do. This is how I trade. This may not be everybody's way of trading, but if you can't see accuracy in this and this helps you trade your method better, then I've got nothing for you. I can't help you out. I want to show you array to array so that when you use your R ratio, that when it fails before it hits your R3 or your R2, you can get out at an R2 ratio because you saw something I'm showing you here, that the dynamicness of that trade is always moving. It's in a state of flux, and it's always doing this up and down, up and down, up and down. It's never fixed. So our ratio trading is just not for me, because that it presupposes that my mind is fixed on a set point, and I have to marry that point, and I don't have anything that gets me out. Now, a trailing stop loss you can put behind that. It's, again, fixed in a dynamic environment that, as you can see here, we saw that turn. Even inside here, we saw that turn, and we saw it turn, and we caught buys and sells. There was no R ratio in here. We just literally had a stop loss. I was risking 1%, and I'm trying to catch a little bit of profit here real quick. And you may say, well, 1%, Darren, you're only going to get 0.5% there. Why would you risk 1% for that? That's entirely up to you. If you don't trust that that little run there now is a turn point, that you don't expect that to get hit, that I'm really never going to get 1%. If it trades above me, I'm going to be out before my 1%'s hit. So what am I really risking? It's really difficult for people who believe in R ratio or risk to reward. I only ever want to risk 1%, but I'm going to snatch rewards as quick as I can. And if I'm in the premium array heading for a discount array, then I'm pretty confident that my stop loss isn't going to get hit. And that's just in case it does. And no different than anybody else who puts a trade on. You're always at a loss the moment you put it in anyway. So if you're going to risk 1%, this is all about your psychology of trading, not whether or not you judge whether or not I'm right or wrong. I could be super confident in knowing that when I'm in here and it trades in and I get in on that stop loss isn't going to get taken before I get profits at my next point here. So as soon as I get into profits, slammo, I move right to break even. Now I'm at 0. What's my risk to reward? It's 100%. It's 100 to 1. So that's another, again, it's a dynamic thing. Anyway, that's how I feel about our ratio. So hopefully that explains what my risk tolerance reward ratio is. Maybe my biz. No, not a hose. No, not a hose dragon. Not a hose dragged. I'll tell you about ADHD. That carrot won't work if it's behind the horse. That's awesome. It won't work if it's behind the horse. You're absolutely right. Oh man, that hits my funny bone. I've got this mental picture of this horse looking back over its shoulder saying, look, dude, put the damn cart where you want me to where you want me to go. When I turn it sideways like this, it means I'm neutral. And usually the carrot will go sideways like this because it can't make up its mind. It's trying to go sideways to my carrot. So if I stick it above or below it, then we get on my directions. But when it's off to the side here, it's my way of saying I don't know where it's going to go right now. Cap Nemo, that was good. You hit my funny bone on that one. In the middle of 15-minute. Friends, let's show Darren some love with your thumbs up. Thanks, thanks, Lambo. Have similar challenges with ADHD or ADD. You know, we could spend a whole freaking day chatting about ADHD and all the stuff that you go through. And I was watching a guy last night. My wife had this lady on with her husband on their blog she likes to go on. And there's a guy's talking about his ADHD and how, you know, we deal with this angry. You get angry really fast. You don't know why. You're emotional. Your moods to go up and down. And, you know, when you can't focus on something, I can't listen. I don't know if you guys have this ability. It's like as I get older, I have to turn the music down so I can turn the wheel in the car. I have to have the car quiet. I can't have music playing in the car and have a conversation with somebody. I can't. It completely distracts me. If I'm watching TV and someone's trying to talk to me, can't. I won't hear any of your conversation. I literally, my wife has to come up and touch my hand or touch my arm, and I go, because I love touch. And I get her attention, and then I talk to her. Or I will have to hit mute on the TV, because if I hear that going on over there, I can't focus on what's going on here, because my mind's listening to that and listening to this. I'm all over. But then when I hyper focus, I can be like in the middle of these charts and I'm just fixed on it. I love it. I know what I'm looking for. So yeah, ADHD can be it's a gift. Not a lot of people can hyper focus like that. Right? So look at it as a gift, man. Don't look at it as some deficit disorder. Jesus, ain't no damn deficit. You can look at the bank account. It's not in deficit, my friends. This is using it to your advantage. You on a tangent. You're on a tangent. Yeah, I keep running off on little tangents. It's just coming from my carrot. It's going sideways. The weather's wet. What? In England? Terry, what's going on over there? What do you mean England's wet? Pizza! $25. $25 is an 8-hour day there in Morocco? That's crazy. You always figured that Morocco is like where all the rich and famous are. And so you're making like $1,000 a day or something like that. Wow. Just goes to show you I'm completely naive living in my little bubble here in Canada. ES reserved and reversed on the right. So do you rely on a high win percentage? So do I rely on a high win percentage? For what? I'm not sure what I understand what you're saying there. Do I rely on a high win? I rely on what I'm looking at in the charts, on the algorithm delivering what I want it to deliver. When I see it, I take money at it. That you're getting mixed up with success versus not success. Does that work for you? Doesn't it work for you? Look at what I'm showing you and see if it works. If it's not working on the principles I'm trying to show you, don't worry about whether or not my success ratio, because your focus is on, well, does this work? Well, look at it working. If it's not working, you'll see it not working in a few minutes. You'll see I'm full of shit. And then you decide whether or not it's a success ratio for you. What I trade over there, it's successful for me. What I'm showing you here is successful, whether you want to use it. A lot of times you'll see me say, oh, here's an entry. And people say, well, why aren't you taking it? Maybe I am. But just because I'm doing it in here, people are going to want to copy me in here instead of focusing on what it is I'm trying to show you. So don't focus on if it's a high success. You make it a high success. I'll show you how it works. I'll tell you where you can get entry. Where I say, as soon as I say, here's your entry, put a line in there then and say, is he full of shit? Does this move into that next level he talked about? Yeah, it did. Well, there's 100% right there. Look for the next one. If I give you another one and you put your line there and it makes it to the next one, you go, shit, that's 2 out of 2 he's done there. That's 100%. You decide the ratio. I'm not going to prove it to you. I'm here trying to show it to you. You prove it to you. My biz, how do you manage when a trade goes against you? Just 1%. Yeah, just 1%. If it trades against you, I will see very early where the failure occurs, like right here. Now, if you're going if you're going short right here off of, there is nothing in there, but let's say you came off of this order block here and you went short right off of that, and you see this and you got 1% sitting up there, get the hell out. It's trading above you. As soon as that body closes above you, that trade is done. Right there, it's out. Right there, it starts trading back up. There's my fail safe. I'm out. I've made money all the way up to here, and now it's reversing. It's going to go higher. Back into this array. Look for this one to give the mean threshold. You want to see that give way to run to a premium. We're looking at premium discount. You want to run back up to that one. This one's in the middle. If that mean threshold holds and it runs back below this, then I'll get short again. But until then, I'm bullish. Right there, I'm bullish. It's going to come back, tap you right there. Now it's going to start running. You're into this mean threshold, so it needs to get through here or eat through the bottom of this, come back up and get inside it to go short. But if that's the risk. Now you have to decide for yourself, my biz, that is this the range you want to play in? You may be saying this is consolidating. Why are you wasting your time in this? When you ask that question of me, it tells me a lot about you not looking for, I'm not interested in this. That's fine. Then don't be in this. But this could be a bigger version or smaller version of this or of this. Of big ranges over here. Same thing. This could be a daily chart. I don't care. Doesn't change how I would approach that right there. Before a swing taken out, I'm expecting a bullish run. This is just a run back into this. And if it closes below it, there's your fail safe. So if you're going bullish there, you're entered in here or here. Here's your fail safe goes there. So if we trade below that now, your stop loss is here. Here's a good one for you, my biz. If this is 1% right here and you're about to lose, let's say it comes through you. Here's your fail safe. If that body closes below that point right there, and you got 9 seconds, 8, 7, if it runs you, you lost 1%. If it doesn't, 4, 3, 2, 1, good. Now you're on the wrong side of it. Now you're bullish or you're bearish. So right there, you're out. You didn't get your full 1% taken. That's my out. But if you wait for it to trade back into this point right here, watch. As it comes back right to there, that might be your exit to break even on your trade. That's why fail safes work. And you, right now, my fail safe would be kicked in and I'd be out of that trade. Some people might say, no, it's so close to there, I'm going to wait there and see if it comes back and taps the inversion one more time before going short. And if it does, it'll get me out at break even. And I'll save my 1% because I'm on the wrong side of the market. That's how I know right away that the markets have turned. And a 1 minute chart. If you don't believe me, wait, you'll see that low is going to get taken. If it comes back up in here, if we trade above it again, then I'll go, nope, I changed my mind. We're going to go back long again. We're in a consolidation. That's the linchpin for me. And here's the new one. So we've swung below a little low here. So you see that pop up above that. Then you're running for here and here, and then eventually there. So you got one little, barely didn't quite get your reversal. So that right there is how you customize your failsafe. And we've talked about that on Sunday, how you're going to make it. So now here's your rejection block getting hit. And if you don't take out the low, you come back into this range where we'll be between here. And if we break above that candle, we'll be between those two. Then it's going to be really, really tight. I'm waiting for it's just coming for the carrot. So hopefully you understand what I'm saying there, my biz, about that 1% that you gave. Sorry, I'm kind of behind in the questions here. 100% agree. The market is dynamic and the strategy must go in the same direction. Exactly. Fernando, you're correct, my friend. 5 times into the reversal. Would it be possible for upside? Price is on a 4-hour fair value gap time frame. I don't know. If I asked right now, I'm a newbie. Hey, Moby Dick, you can be a newbie. Ask as many questions as you need, my friend. There's your opportunity to get your trade out before your stop loss gets taken, your break even there. Now you wait. Now you wait. You broke this on the downside, so I'm rejection block. You pay if you did say, if it came back to you, you pay yourself here. Stop loss goes up there now. Not that you would do this because this is a shit environment to be in right now. Wait for something more solid. And you're really, really tight. See, it's just coming for the carrot. I should have put the carrot above it or below it. That's why it went sideways. Sorry, Moby Dick, you asked a question here. Yeah, if you're on a higher time frame, my friend, if you're over here and you're on a 4-hour chart and you're saying to yourself, you know, this is a reversal. This is a reprice rebalance. So the moment you trade below it and you come back into it, you get short. You're aiming for your rejection block. 50% of the wick, if you're looking for 50% of the wick. If you use your wick rule, there's lots of PD arrays. You could scale yourself out of here before that low gets taken. And we always pay ourselves at rejection blocks because you don't always get your low. Then it comes all the way back up. You get a chance to reload again in 4 hours. So 4, 8, 12, 16 hours later, you get a chance to get back on this one more time. So you've paid yourself all the way down there for 4 hours. You waited 16 hours to get back in again, to go all the way back down and take out rejection block, low, or 50%, low, low, fair value gap, mean threshold, or consequent encroachment, old high, breaker, whatever you're going to trade back to. Like, there's tons of PD arrays that you could be collecting on a 4-hour chart. And that stop loss is just slamming up there. You see this right here? That becomes an inversion. If we trade back up and through it, then that supports a swing back into this range. So you support from here to here. That's the two I'd be running back and forth between, using my rejection block, 25, 50, 75, old high, and back into that. I'd be using those all as scale out points on the way up. And I'd be moving my stop loss on the lower time frames to support that run back up. That's how I'd be trading the 4-hour. Right now I'm still bearish on the 4-hour because there's nothing in here that says, other than the fact that you kicked off this breaker right here. Is that a breaker? Yes, it is. So that breaker right there, you've kicked off of that, and see how we've traded right to the very bottom of it, right to the bottom of it, and then snapped off of it. That was a full run all the way through that breaker. That gives me a hint that we probably got more downside. Don't oversure. Don't just take my word for it. Wait on the lower time frames for confirmation that we're coming back to another array like this old high here, back into a range here that would support like old lows that would support a reversal. So now all you're looking for is a decent reversal to come back down into here. If not, you're trading, if you're trading smart and you're saying, I expected a reversal to happen off of here. So let's say that was our objective we were aiming for, this old breaker. And you hit it and you go, great, I hit it right there and I was expecting it to kick off. It didn't. Right here, nothing. Here, now watch over here. Here, nothing. Here, oh, look right here. Here, oh, right there. Mean threshold of that one. Oh, I'm expecting a kickoff of a mean threshold. There. You see that? Right there. Look where this is here, where the reversal happens. Right on the mean threshold. Do you see logic in my rational, my craziness, and how I see charts? You saw the reversal happen. You expect something to happen off of that. You wait, and you go, oh, it's right there. As soon as it comes back in there, I'm taking that for a long. Woohoo, I'm going long. Now you're in it to go long. That's your entry for your 4-hour long, go long. Stop losses here. The moment you start to break that old high, move it up to break even, and wait. If it would have come back and take you out, you've got yourself some profits already in that piece. Come back, do it again. Hop back in the same trade you took here at the mean threshold and wait. And if it takes out that high, pay yourself. Move to break even. And if it comes back again, do the same trade. You've been collecting money. I call this building the buffer. This building the buffer. So if it literally rips down against you, you've built a buffer in there of profit that if it rips against you and goes in the opposite direction again, didn't cost you anything. But you would have seen the reversal happen long before it rips through you if you have a fail-safe. How many people trade with a fail-safe? I bet you not very many. I bet you nobody really trades with a fail-safe. I've been in this for 7 years now. I've never even heard once somebody mention a fail-safe. That's just some new little invention I came up with because I've lost enough money in the markets that I'm trying to protect it. Hopefully that answers your question there, Moby Dick. Tuncer ES made lower lows while NQ is not. I'm waiting for NQ long confirmation. That's fine. That's fine. If you're using the SMT divergence in ES versus NQ and which one gets your confirmation, where's your entry then? That's my question. And I don't mean this to be, I'm not trying to be rude. I'd say, where's your entry then? What's your confirmation? Is it on which time frame is your confirmation on? That's the one you trade on. And if you find your confirmation is at that specific point, then you'll come back here and find your precision entry. And you'll find that it's the same place that I'm finding mine. You just may have missed a whole bunch of take profit points before it hit that confirmation. But we'll have the same confirmation you'll have. When you get yours, we would have had ours already, because it would have happened a long time ago in the 1 minute chart. And you don't have to believe me, just stick around and you'll see. James, good morning. Take any trades today? Yes, I took trades today, James. Did you take any trades today? I think everyone has ADHD. Some manage it better than others. Yeah, there's probably a lot of it out there. It's just a label. I was never big into psychologists' labels. I was thinking some people use labels as a means to have an excuse not to do anything with their life. I believe that. I believe when I was younger, I actually believed, because I was born dead, because I was born in cardiac arrest and they had to do CPR on me. What a great way to get started. Like, life's great after that, man. Everything's positive after that. That I had that asphyxia for a while. That I grew up believing that I was asphyxiated at birth, so therefore I had brain damage. Therefore I was messed up. Therefore I had an excuse never to succeed in life. That all I would ever be was just a big dumb jock. And that's probably why I obsess over, if you saw my certificates, before my ex burned a huge pile of them, if you would see all the things that I've done in my life, because I obsess over learning, I refuse to accept that fact that I'm this dumb jock. Like, all jocks are dumb. Are you kidding me? But there was that belief, and I grew up for that forever, ever. And it wasn't until I was well into my 20s that I started to go, wait a second. I'm pretty passionate. When I get focused on something, we didn't know what ADHD was back then. When I obsess over something, man, I can put my mind to something, I will learn it. And I have learned so many different things, man. I've reinvented myself so many ways. Artist, acting, paramedics, firefighting, teaching, started my own first aid business, and I've taught hundreds of thousands. I've taught self-defense. I got into karate, acting. I've been a security guard. I've had so many jobs. I've been a short order cook, dishwasher, pot scrubber. I've done it all. Scuba diving, I was going to get into scuba diving instructors. I got into water rescue, high angle rescue, rope rescue, swift water rescue, ice rescue. I've done them all. I got the certificates of the I've done forest firefighting. I've done wildland urban interface firefighting. I've taught fireground survival. I was an instructor for fireground survival. I've done it all, man. And now I'm a trader. Hyper-focus. Reinvent yourself, man. The best thing you guys can do is pay yourself. Trade, learn yourself. Keep loading stuff in here. Don't ever be restricted by a belief set that says, I can't. I can, damn well I can. Prove it to yourself. Like the algorithm. Just prove it to yourself, and as soon as you get that little bit of confirmation you can do it, double down on it. And if you fail, it's feedback. It ain't failure. It's just feedback. Nobody's going to tell me that you guys can't succeed. I'm not going to listen to any of your bullshit stories about, I can't, I don't know, self-talk crap. Check your self-talk. You totally can. If I can, you totally can. Totally. There ain't one of you people out there that I don't believe in. Not one of you. Silver bullet time. We got nothing going on. Sorry, let me get to some of your questions. As usual, I digress. I jump off. I can see why Michael did this now. You get into these little, I've got my platform of 73 people, and I'm gonna blab away to all of you. Average payments $300 a month. Wow. Another 3K day with multiple small trades. I went from hating consolidations to loving it. See, Chris? You see how once you understand the PD array matrix, and you understand even inside this little consolidation right here, that it was literally going from premium discount. What's the premium? Right here. Premium. Where's the discount? Down here. all the way down through, extended all into the rejection block. Where did it come back up to? Like array to like array. Discount, premium. This candle, that candle. We ran all the way up through it. We came all the way back down. Tip, tap, right there. Oh no, you didn't quite get it yet. So there's still a little tiny piece down here. So now you run up. You're extending your range now. You want to see this order block hold price and continue higher. And all these people, the consolidation cam model people are going, give me impulse, give me impulse. They want to see a big impulse leg shoot straight up here. Create a fair value gap, come back down, tap the highs, start running for that. Next objective, make some cash. Stop loss goes down here and fail safe. Fail safe. If it comes down below you, then we're on the wrong side. This fair value gap is that thing we're looking for constantly that gives us the indication for the next place to start taking my money out at. Because that's what the algorithm's doing right here. Why do you think just because you suddenly get your thing in here and you got an R ratio of 4 to 1 or 10 to 1 or whatever it was you like to trade is going to work in this small little range? You start trading the range. What arrays are sitting there? Grab yourself money. If you've hit a premium array and you see the reversal happening, chances are if you're in the premium portion that you could start collecting at least at the 50%, move yourself to break even and pay yourself. And you get 3K, cheapers, $3,000 for you, Chris. And you got these guys in Morocco making $300 a month. That's crazy. That's crazy. That guy, Simo, you've just made his entire 3 months worth of wages in your bopping around inside of fair value in the consolidation. So that's a guy who says, look, man, I see an opportunity and I'm going to take it. Great job, Chris. I'm really happy for you, man. Well done. Derek at my biz, but I think the answer is yes. ICT method is so reliable that 2 to 1, 3 to 1 R isn't necessary. Michael is very clear on this in his videos, which I recommend you dig more into. Agreed. If this is what I say, if ICT stuff is shit, and I'm showing you how to trade on a 1 minute chart, I've been doing this for 7 months now, live in front of you folks. If in the 7 months that I've been doing it and every minute I'm looking at, if you haven't found that I'm full of shit in that much time, there must be something to this algorithm. Whether you need more proof, whether it's bank accounts, there's some people coming here asking for some crazy ass proof for validation. And it has nothing to do with what we're showing you on a 1 minute chart. If you can't see the accuracy of this, you are clearly got blinders on, or you're blocked by a system that you're so committed to that you do not use the Tony Robbins approach, right? Which is, I reserve the right to change my mind if I learn something new in the next 1 minute candle. I will change my mind. I will not die on a hill of beliefs that in the end, I don't believe. There's far too much fight and conflict going on in the world because of that very reason. They have a belief system that they refuse to let go of, even if it's flawed. They've got some dying loyalty to it, and they literally die because of it. It's terrible. Change your mind. If you see something better, change your mind. If you find a better way to help somebody, change your mind. But be thoroughly committed to what you believe in until you get something that proves to the contrary. Then be bold enough and brave enough to change your mind. And that's what the 1 minute chart does. How's that for philosophy? You can change your mind quite a lot in here. And as my little friend Chris has just showed you, you can make a lot of money changing your mind. Where are you in Canada? I'm fairly new to this channel. I'm in BC, Lower Main. I'm coming out to BC. I'm not too far from you. I'm in Alberta. Capneal, and there's a Lucas, I think, is out there in BC as well. So we'll have to meet up for coffee, man. You guys might be my first little video chats say, hey, look, here's our guy over here. We're over in BC Lower Mainland. I'm going to meet up with my buddy Cap Nemo, and we're going to have a little chat, talk about the charts, tell me a little bit about your story, and share it. I want the community page to grow with meetups. I want to meet up with you people and have a chat and tell you, so you guys get to put a face to the name. If you're interested in putting it up there, I won't put it up if you're not interested in it. But, that's what the community is about. You get to learn a little bit about each other, and you get to share in some of our successes and help each other out along the way. That's what I want to build for this community. I really do. Chris, thank you again. Not bragging. Darren's just excellent at explaining this PA. It's taken me 3 years to get to where I'm able to be profitable. Darren is helping me with consistency. Excellent. Well, thank you, Chris. Thank you. Thank you. Awesome. Your hard work is paying off. I'm right behind you. Smooth edges. Realize breaking them below the low 402. Man, I have a FOMO. I saw but missed 3 perfect entries and stopped out at break even in a good one. Now I'm sitting on my hands, drinking a lot of water and reading the tape with you. Good man, Christian. So that's good. When you're at the point where you just go, I'm out. If you start to get those intrusive thoughts, I find myself, I don't know if any of you guys have felt this, that when you start to trade something, if you miss something, you start to feel a little bit of anxiety, a little bit of in your gut, like, I missed that. And everybody else is getting in on that. And you start to feel this need, like, I got to get back into it. That's the time when you have to go, I have to sit on my hands. Because now, what am I really responding to? I'm responding to cortisol. I'm responding to negative self-talk. I'm responding to pressure, peer pressure, candles, possibilities of dreams, possibilities of things I could accomplish with that money, and then all that shit just piles in. And is that part of your trading strategy? That's what you have to ask yourself. Is that my trading strategy? Oh yeah, I need to get really stressed out. I need to get some cortisol. I need to get some cortisol in my body. That's where I like to stress. I like to trade with some stress going through my body, right? If that's your thing, give yourself a couple of shots to the head and hit the go button. If it's not, and you start to recognize that, Christian, good for you, man. I got total respect for you. Sit here and read the tape till you start to feel comfortable, because we know this happens all the freaking time. It'll happen later on today. It'll happen in the next hour. It'll happen all over the place. And our CAM model people are just running out of saliva right now, because they're looking at that going, oh, the deliciousness of this CAM model is just sitting right here. I just want to get in on this. Right? So good for you, Christian, for wait till all this settles down and you see a nice clean setup, enter in again. Christian, I gotta know, I don't even understand any of that stuff. Meglezalaz did with a smile. Ne ixiglui teso lesi job basit selalo meg less as. Exactly what he said. Absolute. Oh, I get that one. Absolutely. I understand that part of your language there, Christian. Absolutement. We have halfway through the daily fair value gap. Thanks for clearing this up. No problem, Moby Dick. Yeah, Moby Dick, if you're new here, buddy, by all means, pop in every day. We're here trading the charts, and I'm showing you how to read it. Study the ICT material, the free stuff. Don't go paying for it. Study the ICT stuff. Come in here, and we'll show you how to apply it. At least how to read price action. How you apply it is your method. I will offer up some methods for trading it, and study it. Study it. It's the best thing you can do for yourself. I should really move that candle and get this market moving. Going sideways, it just keeps coming for the carrot. Better payoff for the algo to go down and take out all the sell side liquidity, then go up. should be a raid. Yeah, I'd like to see this continue running down now. We've taken out that high, and I want to see it just pull all the way back down into that fair value gap. I tell you, I'm looking into April, making a big dive down. That's why I'm taking this last week off, or this next week off. Then when we come back into April, we're going to catch ourselves a gorgeous run in April. I feel it. I feel it, folks. That's an ICT thing. You got to feel it. You got to feel for the markets. No, it's not an ICT thing. Chris, hilarious, Darren. You and I are a lot alike. I'm prior military, prior law enforcement, now an attorney, and I'd rather be trading full time. Man, I was going to go into law enforcement after paramedic stuff, but I was like, all the shit you guys took in law enforcement with my anger, man, I would have been shooting people just for lipping me off. I would have been, shut up, bang, shut up, I'm talking. Yeah, I wouldn't have been good for that. In EMS, you can just give people like liquid handcuffs. If they start swinging and swearing and getting all violent, you just go, nighty-night. Off to sleep you go. That's only with violent patients. We don't actually do that as a form of, I don't like what you just said. Yeah, good night. Don't even waste your time addressing those folks. Not worth the energy. You know it works, and those who don't take the time prior to learning it know it as well. Overnight thing. Thanks, Sarah Lambo. I just hit $65 in my funded. Simo, you just paid yourself 2.5 days worth of wages right there, my friend. I used my fib tool trade, 30 seconds, fair value gap, 50%. Simo, attaboy. Attaboy. You go, man. Good for you. You just made $65. You paid yourself for 3 days work. And how much time did that take you to do that? And I know it's demo money and all that. And I know you're, oh, it's a funded challenge. There you go. You move the sticks down the field, my friend. I'm so proud of you right now. I'm so happy for you right now. Good for you. Follow the rules, man. Follow the rules. And Draga, if you're watching, follow the frickin' rules, man. Stop talking yourself out of it. Follow your trade, start to finish, and stop letting your head get in the way. Just trade your plan. If your plan is wrong, you'll see it fail. Then you can sit there and go get some feedback and readjust. All that self-talk you keep doing to yourself is just going to beat you up. Oh, look at this. You see these cam model people are like, oh, do you see it? Do you see the cam model coming? Oh, they're running for the cam model. I just hit $65. Good for you, man. Risk 1, TO1. Kitchener, Ontario. You're in Kitchener, Caesar? A couple more Canadians in here. This is awesome. Can meet up with my fellow Canadians. I'm still here. My body shakes with fear. That's good. Now you got don't put any more trades on, Simo. Just sit there and look at your trade, review your trade, and write it in a journal. What you did, this feeling that you're feeling right now, it's new. Eventually you're going to get to the point where you don't want that. You don't want that rush, that dopamine hit, because that's what's going to make you want to do it again and again and again. And you don't want to trade that way. You want to trade based on logical entries. A logical entry, okay? So you can feel that feeling of fear and like, oh man, I just dodged the bullet. Well, you didn't, because you just traded your plan. You executed your plan. And you paid yourself. And that is a reward for a well-executed plan. If your plan went wrong, you just go back and double check where it went wrong and say, I need to modify it again. Those of you who are just taking your CAM model, that you've been waiting for that, and you're like, yes, pay yourself at, can you see a point where you're paying yourself? Not that I'm telling you you have to, but mean threshold, pay yourself here. Right there. And then I would go, and I bring me up to just above here, because that's your reversal pattern. Because don't forget, this could be a reversal, right? So take your mean threshold, pay yourself. If you trade above this again, your stop loss that's sitting up here, that's the reversal pattern. Let me move that away. See how there's a little gap right here? You've already swept the low. So if you trade above this, come back to it, you're going to go long again. So get out of your trade. And you better wish you paid yourself down in your breaker. That's a breaker. High, open, mean threshold. Did you pay yourself at those points? Are you waiting for the rejection block? Are you waiting for are you just saying, screw that noise, I want to go all the way back down here now? And you caught it right off. The cam model people caught the run, and not the inversion people. People who were looking for the inversions didn't get one, but the cam model people are in this, and they're on the run down now. So there's your mean threshold. I gave you that right as it was happening. So yeah, just appreciate your win there, Simo. Go back, double check that the trade that you took was at the right spot, and that you didn't act out of fear and act out of that emotion, because that fear you're feeling right now, I feel for you, man. I'm so happy for you right now. That's great. Cap Nemo, yeah, we got to meet up, buddy. That'll be awesome. Have a little chat. I go to Vancouver, see my wife's kid. He's an awesome artist. If you're ever out there, you see Swoon, SWOON, I think it is Swoon. He's your guy. You want to get some art done, any web-based stuff. He's a graphics designer, and he's awesome at it. See my buddy Baron over at Swoon. And, yeah. So we could meet up for coffees or something like that, because we go out and see him a few times a year. Kenneth, coming out of consolidation, what are the sort of setups for your primary you're looking for? So Kenneth, that cam model I was just telling you about, cam model 1, 2, and 3, you'll see them in our video section in this channel. They are Michael entries, by the way, except for the 3. I don't think that's a Michael entry, but I just added it in there as a bonus for cam models. And they're not called cam. Michael doesn't call them cam model entries. He doesn't have a name for them, so I've named them, that's all. So when you get a consolidation, your cam model entry 1 is from the lows to the body. That's cam model 1. So the body breaks below. When you get an impulse leg like this and you trade back to it, that's cam model 1. Aim for your objective, and it may be a real quick one, like right to here, mean threshold. You take some off there, move yourself to break even, and wait. And if it comes back and takes you out, then you can go short again from the cam model 1. I do like the cam model 2 entry right in here, because we have a breaker sitting right there, and we also have premium array, discount array, premium array, midpoint array. So I like to see if we can get back up into a premium. So you've already paid yourself some cash already right here. You've paid yourself, and it hasn't cost you anything. Your stop loss was sitting way up here, but you've already nibbled out something there, moved to break even really quick. You're out of your trade. Now you wait for a premium array. Or you just say, I'm loading on again. Whatever I made down here, I loaded on again, and I'm going to try and run for rejection block. I personally would wait for a cam model 2 entry. Right in here. So cam model 2 is mean threshold of the high to low of your consolidation. Take 50% of that. And the fail safe, so if it comes to 50%, which is an alignment, so you look for confluences that support a 50%. Give yourself a bit of wick room in here. Stop loss goes up here. If you trade on a close above 50% of the consolidation, close your trade. That's what I would do anyway. You might say, nah, it's too close. I think I'll let it ride. There's 50%. Bingo, off there. We hit your premium array. I get short right there. And I'd be aiming for discount array. You're in a smaller range now. So small discount array. and then look for further downside. If we trade above 50% of that, so here's your consolidation. I just want to show you what I mean by this. Take your equilibrium. Oh, 50% is right there. So it's right into the mean threshold of the breaker. I like that. I would have taken it right there, right off the breaker's body. And if you get a body close above that, that's your fail-safe. Your stop loss shouldn't get taken. Unless it goes rip right through you, then you've risked 1% and lost 1%. But you made a little piece here, so that's the buffer. That's the buffer I keep telling you about. Pay yourself, because if it comes back into the range, you get to load on again, and you've already got money in your pocket, and you're just starting your CAM 2 model entry. So as soon as it started getting down into a discount in here, I would move myself to break even, because I wouldn't want to see this breaker get revisited. And if it does, then we're probably going to revisit a little higher. I'd want this. Look, it's coming right to the 50%. Ding, hits it right there. There's your 50%. Mean threshold. You want to see that hold now and start coming back down. And to me, as soon as it comes into here, I would move that right to break even. Pay myself right that little portion, because I'm inside this range right here. I'd pay myself a little piece right there, move to break even, zero stress trade. Zero stress, and you've got some more money in your pocket. Now, if you're looking at 25 bucks, that's a lot of money to some people, my friends. And if it comes back and takes you out, who cares? You break even, and you paid yourself some money down here. And if this trades above this on a close, you get out, and you don't get the full 1% loss. You get a couple of bucks loss in here. So watch for here. Get ready to move that to there. To me, I wouldn't even want to see it come back over the top of that now. I want to see it just keep coming back into that range. Keeping in mind, if this one is not it, look for this one. So let's say this fails. Let's say this fails. Here's where your fail-safe is going to kick in. We want to see that close above that for a failure. Because I know you guys aren't taking this trade. You're just sitting and watching and learning how price action works. And how the fail-safe will save your ass. Stop losses here. How many people just put a stop loss on and go, and you're sitting there going, please don't hit my stop loss. You don't ever want it to hit your stop loss. But here's the fail-safe. This is the reason why. So get ready to pay yourself. If we get below this candle, that's a buffer. I'm getting some padding now. Slam. I would move that to break even right now. Or to the top of that candle. Pay yourself one little piece here. I've got zero stress here now. I just want to get back in that range. If it runs back up and takes me out, move to the sidelines. You're in a consolidation. Wait. I'm just trying to get you a couple of bucks, and I want you to see how this array ranges that you're in, PD arrays that support price, and the next array inside this range that supports price. We've got this order block here. You're dipping down. There's the edge of it right there. Do you pay yourself there, there, and there before it hits here? You want that? I don't want it to come back up there. So I'd be like, slam right up against break even right now. And I'd sit in this straight going, I don't care. Not going to cost me anything anyway. And if you really don't want to lose it, then just go, I'm going to go right up against that stop loss right there. I'm going to make 10 bucks. And I'm going to wait. I'm really going to test my theory about whether or not this range here is going to give me some level of liquidity. Boop, you just got taken out. So now look for this price leg to run back up. I just look at this and I go, did we even hit 50% of that range? Did you pay yourself right at the top of the fair value gap there? Now you may say, no, that's ridiculous, Darren. It didn't even hit the top of the fair value gap, which it didn't. So don't sweat it. So pull your fib tool from that high. We didn't even hit 50%. So this is a price leg up. Look for that high to get taken out. Aren't you happy now? Now right there, if you had your stop loss sitting right there, and as soon as it started trading up above, now you close out and you didn't hit your 1%. You probably took a 0.5% loss there. And the buffer paid for your loss. Again, we're in a consolidation. I'm just trying to show you how, if that was a larger time frame basis, you would have saved yourself your money. We've traded above this swing point right there. Body trades above it. You come back, you tap it. Now we're going long. There's the swing. I didn't see that. I was too busy playing over here looking for the reverse, but there's your swing point. See, the algorithm says, Darren, you missed it. You missed it, Darren. You've been preaching to everybody about it. You have this lows. You swung below the lows. There's your inversion. You come back into your inversion right there. And now we're going higher. Pay yourself at rejection blocks. Breakers mean thresholds. Pay yourself, pay yourself, pay yourself. Move yourself to break even, or as soon as it comes back to here, pull your fib tool, wait for 50%, wait for 62%, whatever. Inside a freaking consolidation, people, it's still showing you changes of direction. I was wrong here because I missed this, and we didn't get that reversal. Had I seen that, I would have been like, no, we're reversed already. If it comes back to there, we can get long. You would have got long there. Again, that's all hindsight. I could be lying to you, right? I just hit 65. I still feel my body shakes. I'm counting out consolidations. Taken now, going up. Market maker. The market will be down for the next hour as we do maintenance. Oh, Derek. I feel like every time you kind of write something, it's like getting a tickle. The market maker. The markets will be down for the next hour while the algorithm undergoes maintenance. See this afternoon. I just read that on CME site. Oh. Blah, blah. I love it. Do you look for the middle of the breaker body or overall candle? TP, I have 3 different places I look for on a breaker. On any candle, it has 3 specific areas you look for. Okay, so every candle, let's say this candle right here, bull candle, and let me give you one that's got wicks on it and stuff. Let's do oh, right here. We'll take this candle. Right there, that candle has, because it's a breaker, it's taking out some swing points. I call it a breaker because that's what a definition of a breaker is it breaks these swing points. It breaks them on the way down. So this candle has, and every candle has the same thing. It has an open, it has a high, and it has a close, and it has a low, obviously. So the open and the low, when it's a bull candle, the open and the low are levels that I look for in terms of 1, 2. And the mean threshold, which is the point in the middle of this thing, not the whole candle, but the body, the mean threshold is a line in the sand that you don't want that to break to the upside. If it breaks to the upside, there's a higher likelihood that you're going to run the rejection block and the rest of the wick and take the highs out. That is your line in the sand when you're coming down to it. It would be this guy here. You have the high, the open, and the mean threshold. You don't want to see it break it. If it breaks it on the downside, especially with the body, and that's in a breaker position, that becomes a level of support that I can get into to go short. Like right here is an example. The body breaks below it right here. We trade back up into it right there with precision right off the bottom. See those 3 different arrays? Right off the bottom array, and then continue down looking for the next one. Here, here, and look, watch when I come down to here. mean threshold. Is it a line in the sand? Damn rights it is. Those are specific arrays inside one candle and an order block. I hope you understand that. If you don't, study ICT material for free with ICT. Go study him. Learn it. Take your time. If you're trying to rush through this stuff, you're trying to get it all in 2 weeks, don't come here. You're wasting your time. If you come in here for signals, you get signals every day. You get signals hourly. I give you entry and exit points. You want to come in here and make money that way? I'm just feeding you for a day, man. I'm offering you a whole lifetime of opportunities to feed your family and your friends and total strangers. If you want to just collect the signals I'm giving you, I get it. Go ahead, do your thing. But if you see that someone's offering you the golden goose instead of waiting for the next egg that comes out its ass, then I'm offering you the whole goose. I'm selling golden gooses for free. And yes, sometimes in life, some things are free. And you're getting Michael stuff. He gave it to you for free. You're getting to see application of that stuff that he gave you for free. And people still want a free handout. All right. It's available to you in here if you want it. This is the applying of the stuff that Michael's taught, right down to a 1 minute chart. Minute by minute. And that damn horse is not throwing us off today. You know how many other people have been thrown off in the charts today? They're going, this is a mess. Nobody trades this. Nobody can trade this. I've just showed you. We've been in this chart every minute, and it all makes sense. If there's ever, and I'm not trying to brag, but if there's ever a point in this thing that I was full of shit, by all means say, hey, Darren, that candle there, you were full of shit. You were wrong on it. I'll quickly go in and go, where? Ah, here's where I went wrong. And then we'll use a little hindsight to get us better informed moving forward. And anybody who doesn't believe in hindsight, you're an idiot. You're a complete moron. You have no idea what you're talking about. That's what I say. Market maker, blah, blah, blah. Do you look for the middle of the breaker? Yeah. So hopefully that you understand what I'm talking about there, TP. And again, go to Michael's core content material, and he explains each order block, what they mean, what a propulsion candle, vacuum candles, gaps, measuring gaps, breakaway gaps, all that stuff. It's all explained in there. And then when he gets into PD arrays, really make a ton of notes on PD arrays. Live them, because that's what I'm showing you here. Fair value gaps. When is a fair value gap a fair gap? When's a breaker a breaker? When's a mitigation block a mitigation block? When does it turn into a senior array? And he doesn't call them senior arrays. I do, but there's a basic order block will turn into a senior array at a specific point. And you'll learn all that. Then come here and we'll show you how to apply it. And practice reading. Spend hours in here and it will benefit you in the end. Thank you, sir. You are appreciated. You're very welcome, Kenneth. Teach a man to fish. And hopefully you're seeing that we're showing you how to change your lures and get in a better fishing. You can use better line. You can use a better rod. I'm trying to show you the rods, the reels, I'm showing you everything. I've got the whole tackle box open and it's free. Help yourself. Or you can borrow my rod and collect the money yourself. I don't care. I won't be here forever. I won't be here forever. It's like Michael says, he doesn't go on Twitter and that anymore. He does, but he doesn't. Like every once in a while you see him pop on there, poke the bear, and then leave. But if you don't see the validity in this and you see how well it works, then you're really missing out on some opportunities. And look at Simo. Man, he made 65 bucks. He made 3 days worth of wages today. I bet you didn't feel that kind of anxiety in working for 3 days in a job you either didn't like, and the rush you just got from that, Simo, man. And it was correct. You start to see the stuff and you go, is this legal now? Am I allowed to do this? Can I really make this kind of money? Is it possible? Oh man, life could be so much more different if I follow the rules. Droga, follow the rules, man. Get out of your head. Get into logic. Look at the range you're in right now. Premium, you're in the discount of a premium range. Discount premium of the premium inside the range. Consolidation. See how your CAM model, people, if you're holding out for a retracement back into this here, if you're wrong on your 50% of that consolidation and you waited and you think, you know what, I'm still close to my stop loss. If it comes back into me, I will get out when it comes back into my range again. So here you weathered all this. You got a good squeeze. You were like, oh my God, it's going to take me out. And then also it reversed back in and gave you an opportunity to get out. Now you see there's a reversal happening here. The body's traded below it right here. See that? You trade back up inside it right there. Now you may say, no, it traded above it. I'm out. Stop loss goes here. If you, again, that candle there is all on how you manage your failsafe. If you have a failsafe, and most of you I know don't, but that candle right there is where you make your decision. How you hone your failsafe is all on that candle right there as you make that decision. If you use that as a swing point, you took out these highs here. They are not super significant highs, but they're highs. It's a breaker. You take it out, you run back through the breaker on the opposite side. You take it out on the downside, come back up into this order block here, and you continue down. Pay yourself here. That's where you got in there, there, and there. You start to pay yourself. All three of those are paying right now. Pay yourself at the rejection block right there. Pay yourself at the low right there. You paid yourself. Now you should be like, tick, tick, tick. Stop loss should be break even, zero stress trade. And you're pulling your fib tool now and look for 50%. Look for 62, blah, 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 if you're using your fib tool. So rinse and repeat over and over and over again. I want you to see this over and over repeating itself and paying yourself quickly. Move yourself to break even. So if that's all the only payment you got, who cares? You paid yourself. Oh, I get another one. Bonus. Oh, 50%? Sweet Lordy, I get to pay myself again. Look at this. Did you just pay yourself at 50%? Are you going to pay yourself at 62%? If it hits 62, move your stop loss to 50. If it hits 70, move to 62. 75, 70, 78, 75, and then it comes back and taps you out. Optimum trade entry, you're good. You're golden. You made money all the way down, and your stop loss was trailing right in tight behind you because you're using the fib to me method. Fib to me, folks. Fib to me. Be like Thomas. Be a fibber. Are you a fibber? D, should have a pre-qualifying survey before entering the room. No, I don't mind. There's lots of retail people going to pop in here. There's a lot of people. I understand there's a lot of people coming in here with a preconceived notion. They've been doing it for years. That's why I love people like Terry. This guy's been trading back from the day they were throwing pigeons into the air with their trades taped to their legs. The guy's been around for a long time, and he is still saying, you know what? I see logic in this. 77 years old, the man still sees logic in something like this, and he goes, I can ditch some old beliefs because I can buy into this. It makes a lot of sense to me. And that's why Terry's here. He sees logic in this, and he can trade this. And with all that knowledge he's got of all the other stuff, if this tweaks or hones his entries that he's been working on for decades and makes him a better trader, man, I'm happy. But what courage to be able to do it at 77 and say, I'm still learning. I'm still eager to learn. And I'm not dying on a hill of beliefs. I can let my pigeons go. They're not used for that anymore. He can finally hang up the chicken coop because he's into more modern day stuff. Do you wish you paid yourself here? Right now you're getting squeezed again. Do you wish you paid yourself at these key points? That's how Chris made some money today. He's trading these really tight little... I'm collecting money, and I'm going to come back again. If I get to load on again, back here, I've built my buffer again. Here's my entrance, okay? You got in here, maybe right there on that 1, 2, 3. All 3 of them loaded on. They get down, you pay yourself. If they come back inside again, look, all 3 of them loaded on again. If it comes back to these lows, pay yourself again. Oh, look, if it comes back again for the 3rd time, your entry is paying you again at these lows. So you've paid yourself 3 times and the damn thing hasn't even moved out of there yet. If it touches this rejection block, pay yourself again. You say, jeepers creepers, man. We haven't even moved out of here yet, and I've paid myself 3 times. Right there. Oh, look. It's working. Look at that. It's moving into a discount array. Are you pulling your fib tool now? You're 50%. You had 3 times you get to play in this thing while it finally gives you what you need. So if you're looking for your fib tool here, man, I hope you guys see this. This is so logical. 50%. As soon as that comes back to 50%, pay yourself there. Move to break even. And it hits 62. Whammo, slam it right up there. These guys are automatically 100% in profit now. Woohoo. As soon as it gets to 70%, watch. If this comes all the way back to 50 and breaks you out, you just got the rest of your trade. Oh, there's 62. You're at 50. As soon as it hits 70, right there, move to 62, and bang, you're out. You're out of your trade. You made all that money again. 1, 2, 3 times. Maximum profits all the time. And if it comes all the way through here, blows through, tears out the bottom, who cares? If it comes back in there one more time, start it again. Do it all over again. Your trade has not started yet then. You've got paid 3 times for your trade to start all over again. And if it didn't take you out there, then you move it to 70, 75, 80. As soon as it runs through them, you keep dragging your stop loss down. And eventually when it hit that one and snapped back up to 75, you're out. Or maybe you're holding it longer and you're saying, I just want this to run to my discount array here. If it runs through that, rejection block, pay myself. Whatever. You get my point. Now you're back inside that range there. If we hit this guy here, this is a mitigation block because we don't take out an old high with it, so I don't expect it to hold price very well. But if the mean threshold, like you just saw it hit right there, I love that. Just tap it and come off of it. If it runs through it now, I'm all right. I just love the way it taps on it. Rejection block's just been hit. You're going to get frustrated if your lows don't get taken, and that comes back into that range. You're going to say to yourself, for Christ's sake, I should have paid myself there. If it turns around right now and comes all the way back up and you go, oh, he was right about that damn RB again. Lambo's sitting there chuckling to himself saying, oh, I love RBs. You were getting greedy and you wanted that piece and you didn't get it. There you go. That's why RBs, rejection blocks, you should be paying yourself because now you're getting squeezed. You come back all the way back into here. If that breaks through that, you're looking for upside. We have a swing point. The upside takes it out. We're back into mitigation block, roll over, come back down. Stop loss here. We trade above it. Your failsafe gets you out. So right there is your line in the sand. Watch, because we're in a premium array now. Order block, mean threshold. Let it wick into that and snap back below here. You got 27 seconds for that to come back here. Watch. And that mean threshold. I'll leave my crosshairs on that mean threshold there. Oops. 10 seconds, make your move. look at that. It's coming right back into that area again. You get another opportunity to play all over again. Do you see that? You get another opportunity to play. It's like starting that trade all over again in a premium yet to run all the way back down to those relative equal lows we got sitting back down there. And now that we've traded above here, you see how you go, ooh. Now I'm between this guy and that guy. You've traded there between that on that candle. So now you move to the sidelines, or you say, I'm going to guess that we're going to go down further. We've got bullishness now. So I'm changed my mind. I'm bullish right from there. It opened there. Your stop loss was here. You get out. Or you let it sit and wait for it to come back into inversion, tap it, break yourself out at break even, or get yourself in now. Here would be the optimum one to be in, because if it trades below you and comes back in, then you can break even because you thought that was going to go long. See this one here? We have not taken an old high out. So if this trades below this, comes back into it, I don't look at this as a reversal pattern because I didn't take out an old high. So we've come back into it right there. See it? Tap it. Now you're going higher. Stop loss is down here. The moment you break that high or that mean threshold again, pay yourself, move yourself to break even. And you might say to yourself, well, that's not much to make money off of. We're talking about save your ass real quick because we want this. This is the inversion point here. If we go below that and come back into it, that long trade you were in is out. Because now we've got the reversal happening, coming back. Not a reversal, but it's a break in. It's the algorithm saying, no, I've changed my mind. I'm going short. I just needed to get back into this breaker. And I'm going to go back to this order block here, which would be a minor level candle. It's not just a basic order block. It's a mitigation block because we made an attempt to go above that high. It didn't work. So if we come back, mitigate off of it, we could find higher prices, or we could blow through it, come back, find some weak support at it. You'd be looking for something like, oh, there's double mitigations. One here, one here. That one did not take out that high either. So 2 weak mitigation blocks. Mid-level support candles. Breaker. Senior array. Much stronger candle. So that running back into here, still looking pretty good now. This was just the reversal back up into the range. So you can see how you can get messed up with one versus the other. Which one do I trade to? Which one's in the premium? Which one's in the discount? Well, if I pull my fib tool from here to here, look where they're sitting. That guy's sitting right at 50%. So that's your premium array. Not a really strong discount array, is it? It's just sitting right there in that last little portion just below 50%. It isn't a discount, but it's barely in there, right? That's your entry point. Or you'd have to wait all the way down at 62%. If it fails, you can get out right there if it returns back to it. So for this one here, your stop loss would go, if you're going entering here, here, stop loss goes up there. If it breaks that piece to the upside, then you're looking for further upside. It's in a premium array. And if you break a premium array to the upside, chances are you're going to go higher to this guy up here. So you want to see this give way now. You want to see this blow right through this and not just come around. Otherwise, you were stuck between here and here. Oh, we're going into lunch hour. I think my thoughts are more in the lines of, are you willing to put in the work? There is no entitlement. I totally agree. That's why when people say to me, which video should I start with in Michael's material? I go, the one that says Season 1, Episode 1. That's the one I say start at. And then come all the way up to Season 15, Episode 95. Start there and get to where we're at. There's no shortcuts to understanding. I love Einstein's belief. Einstein says, any idiot can know. The point is to understand. Anybody can know a chart, but if you understand a chart, the whole world opens up in front of you. The whole world of possibilities. And then all those methods, all those techniques you guys are learning from ICT, all those entries that you have your own bread and butter setup, this is going to make your bread and butter setup so much more cleaner, so much more stress-free. Even if you've got a nice clean entry already, at least this takes some of the worry off, especially if you have a fail-safe. I encourage you all to learn a fail-safe. It is really instrumental in saving your stop loss. There's a stop loss, and then for me, there's a more defined dynamic stop loss to protect you. And that protection point is the point in which the algorithm shows you I'm running to the next highest part of this range that I'm in. I'm going to show you the failure, and I'm going to show you hey, guess what? I'm going higher. And I'm going to the higher part of this array because I'm keep going from premium to discount all the time. That's all this is doing, premium to discount. And when it tips its hat and says, look, I'm breaking to the upside, I want to go to a premium array because I've dicked around down in this lower stuff for a while. I need to get to a higher premium array for me to go lower. So I'm just letting you know that I'm heading there right now. You're welcome to join me. Okay, thank you. Here you go. You're in the premium array now. You're welcome. Now, I'm going to give you a hint. If I drop below this little point right here and say, hey, guess what? I think I'm going to go down to a discount inside here. Just thought I'd let you know. Do you want to join? Yes, I'll take it. It's a couple of bucks. I'll take it. And that's how you look at those things. Or in this range, sorry. See it? Pop. You're welcome to join me if you like. And then come on down into a discount array inside that small range. Look for a run down into here. If it runs above it again, it says, no, I changed my mind. I think I want to go for a higher array. All right. Watch it. Watch the range you're in. If it trades above, you got 35 seconds. Again, stop loss would be like really super tight. Not that you're going to take these, but imagine, put your sticks out there. Draw your lines. Put them on the chart. And put your sticks out there. You say, okay, my stop loss is going to go there. I'm going to put my little entry is going to go right there. I'm going to put my little stick in there. So as soon as I get down into this discount array right here, as soon as I touch it, oh, there's the top of it. Is that 50%? Pull your fib tool from there to there. Like really, this is the same thing on super fine detail. Look, there's 50%. Stop. There's your entry. 50%. Woohoo! Pay yourself. 62%. Woohoo! Move to 50%. Yeah, I'm out. I'm inside that range. I made a couple of bucks. I bought a coffee. If you're not, here's your discount array. There's a 70% right there. There's optimum trade entry inside that. You broke below that piece there. You came back up. Stop loss so safe. You did not trade above. You're high. And there you go. You're in the discount range right now. It tells you, even in tight little ranges like this, where the algorithm's going. Man, if you guys can't see that, stick around, my friends. Stick around. And see, right back to body, pay yourself. Pay yourself, pay yourself, pay yourself. Move stop loss, right up nice and snug. And if it comes back and takes you out, somebody just came to your door, knocked on and said, hey, I'd like to give you $25 for looking handsome as a devil. You're a handsome man. Here's $25. You say, thank you very much. Close the door and head back to your candles. Money flows to you and through you, my friends. Don't try to hold on to it. Don't clutch it in your hands like sand. The harder you squeeze it, the more you lose it. Let it flow to you and through you. Help people with it. You'll find more of it will flow to you. See, now there's the mean threshold taken. Pay yourself again. If we start eating through the mean threshold, now are we going, ooh, discount array. This guy here to this guy here. Look, welcome for a run below that low. Then into this, and this. All those arrays are sitting inside that little tight consolidation. And if this guy holds, then you're looking for the next price leg up. Still coming off of here. You're between here and here. That reversal above a high, this reversal below the lows. You're between that one and that one. Trade there, move out, move to the sidelines and say, I just snatched some more money out of the markets in a really tight little consolidation. Oh, pat yourself on the back. Because you didn't gamble, you traded logical point to point, array to array. And you saw, if you don't see the arrays, you just need to practice them more. Or come here. You'll hear me talking about them. We're still on the horse. Nothing's shaking us off. There's nothing in here shaking us off yet. We've been all over this. We've been bullish, bearish, bullish, bearish, bullish, bearish, and we haven't changed. We haven't got thrown off. That horse, that bull, that bear is sweating up a storm trying to throw us off the back, and we're like, yeehaw! Come on, bear! Come on, bear! Take me home! There you go, discount array. Don't you love it? Right to the top of it. Bing! And we're getting a reaction off of it. Did you pay yourself? Right off that one little piece I was talking about before it was happening, when it happened, and then you got an opportunity to make yourself a little bit of cash. Right there, our friend Simo has just earned enough money to pay himself for the next 2 weeks. And we're in a consolidation. It's not bragging. It's not arrogance. It's please just look at the algorithm. Watch those PD arrays. Study. When you get to that section in Michael's material, study those arrays. Get so good at them that you can literally trade inside the tight little ranges like this. And I always look for a swing point. Swing, swing. And that's the range I trade in. And I look for a PD array that supports price. Inside there, I look for fair value gaps that support price there. I look for a premium discount. I say, what discount array can I go to? And what like array to like array can I trade to? And if I get below that, then I'm going, great. Then I'm heading for a deeper range. Forget this one now. Pull your fib tool to the bottom and then run that. Pull your fib tool from here. When you get to 50%, take some money out. Right there, right at that low. Did you pay yourself? Now move to break even right there. If it takes you out, you paid yourself to break to 50%. Or this old low. I think my thoughts are more agree. Best thing since sliced bread is the rejection blocks. I've got Lambo fully convinced that the rejection blocks are the bee's knees. I got long at that rejection block. First time using rejection block dollar. You actually traded the rejection. Ooh, you're really getting cocky then if you trade. Remember, rejection blocks were great places to get out. If you're really trading a turtle soup at a rejection block, ooh, man, you got some huevos. As my friend Victor would say, you have some huevos, my friend. But hey, that's an entry. That may be your particular trade model. Good for you. Then my question to you then is, where's your stop loss, and where does your fail-safe fail you? Is it when it revisits the inversion? Is it your stop loss just goes as soon as it trades above that? You put your stop loss or your entry in here, and the moment the candle closes below you, your stop loss moves to break even, or moves to the high, and then you wait. If that candle's midpoint gets broken, then you get out. I don't know. I'm trying to think about how you would manage a fail-safe from way up there. Yeah, that would be interesting. Ooh, you could. Thank you for mentioning that. Who was that who said that? Muhammad. This is really good. Muhammad, look at this. I'm thinking if you see this setting up, if you see this big bold impulse leg coming like this, right? No, I was thinking, I'm looking at it in hindsight. I'm thinking if I'm in this candle and I see this impulse leg up here, opens, runs up, if this was fair value gap that is forming below me and I just ran up in here and I go, oh, you could almost do this one. This is the closest I could get to doing what you just did there. Not quite a turtle soup, but it's pretty damn close. So here's how I would do this now that I'm thinking about it. That's why I love having chats with you guys, because it helps my mind pop into some interesting little ideas. So if we have this run up here and this one closes and creates a fair value gap here, you go, hoo, that could be the fair value gap. And I've run these highs out. That could be the fair value gap I'm going to get in to go short. So the moment this candle closes, if I come back and revisit my fair value gap, I'm getting in short right there, because I'm anticipating we're going to run down here. That for me would be more how I would find my logic to do a turtle soup, right off that rejection block right there, instead of trying to hit the high. That's how I would validate this short. I would say, ooh, there's a fair value gap that's formed there. I've taken out a high. Great place for me to get in. I'm going to go here. And if it trades back, if it hits that, my stop loss is going to go here. As soon as it hits that, I'm in. My stop loss is tight. If I'm wrong, it'll take me out. But if I'm right, oh my God, everybody, these other people are going to be loading in here and here, and I already loaded in up there. I like that. Might have to back test that one. We might have a whole new different entry. Thanks, Muhammad, for sharing that, because you got my mind going on that. You got my mind going on that one. That's interesting. I'm going to have to draw that out. Make notes, my friends. If you come up with an idea, make notes. Have a theory. Test it out. Mm-hmm. 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 Oh, I like that. Thanks, Mohammed. I like that. That is an interesting theory. I'm going to look that one up. Thank you, Mohammed. Thank you, thank you, thank you. You gave me a good idea right there. I'm starting to better understand how market works. Lots of carrots for today. Thanks, Darren. Fernando, you're welcome, my friend. You are welcome. So you see how this bullishness right here, this swing, bull candle entered in right there. Look at the body. Even if those you wanted the perfect entry, you got it right there. And you said, if it trades below it, trades into it, I'm short. If it trades it, you see how this is a great example of if you go 1, 2, 3, your first one underwater, second one's underwater, third one's right on the money. You have zero drawdown. The moment you break that candle's high, you start moving up to break even, or you start to look for your first exit point, rejection block, move yourself to break even. As soon as it clears the high, start moving up. Take your fib tool. And now when you start breaking new highs, then you can start changing how you look, how you're monitoring this. Now that you've broke this into zero stress, so you're down here entering into that trade. The moment you start breaking those highs and you start coming back into break even now, it comes back multiple times. You start paying yourself out at the order block, mean threshold, pay yourself. Here, you pay yourself at the mean threshold, which is that little inversion there to here. You want to see that one give up. And you see how it does right here? We got back in it here. Man, oh man, if you were super ballsy, you could have gone literally in this candle, you could have gone in here to trade back there. You trade back up there, you hit it. You go short there, back to this guy, short. You buy in again here, and then you go long again, long, short, literally algorithm to algorithm, and then off you go. So if you're in here long, you took a little buffer out of that, and then you got in again to go higher, rejection block. See how the body trades above here now? Now you're long. You broke that, you're still long here. This one's the stronger of the two. It gave away, gave you an opportunity to say, hey, look, if you're short, I'll give you an opportunity real quick to get yourself out before your stop loss gets taken, because now I'm after your stop loss. I take your stop loss. I have a nice little breaker right over here. Last up close candle before this low. Watch when I draw this right here. There's the breaker. You trade a body above it, come back to it. There's your breaker entry for a long, aiming for here, aiming for here. Rinse and repeat, people. Rinse and repeat. Literally zero drawdown. You're seeing a level of precision now. Look at how many trades you've taken in the past and say to yourself, how many times has my stop loss been really, really squeezed? Look at the precision on your entries. Like when you do your entries, how many times have you gone in and the candles have whipped down below you and then they finally make their way back up? Here's a level of precision entry off of a breaker. You can't get any better than that. That candle's low is 41950. This candle's high is 41950. It is an absolute perfect entry. Absolutely perfect. And you know what? You probably wouldn't have got in with a 0.25 spread. It was that perfect. It would have came down, tapped you, and you go, why didn't it take me in? Literally that 0.25 spread would not have got you in. So allow for your spread. 0.25 to 0.5. Michael always talks about that in his things. So sometimes we can be too precise. How's that for craziness? How many times have you been too precise with your entry that you couldn't get in? Heron, how's things going there? ThetaWave, are you journaling your trades every day? No, I'm not journaling my trades every day. I do trade the psychology when I feel there's a psychological thing I need to make reference to. I like to get it out of my head and bring it into reality and put it on I've got a little thing here I write, and I've got a black book right here where I write, just so you know, I've got a black book here where I've got pages and pages of notes. I'm always writing something, whether it's a note to myself. That's my way of kind of journaling. I do have that. I did pay $20 for that journaling app, and I started doing that. I started cutting and pasting my trades, and I'd put them on there, and then I'd be all excited about it. But I don't have the discipline to spend a lot of time doing that. So I like to write notes in here and go back and reference them, because all that other stuff it takes my mind away from other stuff. So I like to journal notes to myself, especially if it's something that's been affecting me. Sometimes I come in, like my wife will go, she'll hear me going, oh, I don't feel like doing that today. Something somebody said is bugging me. And she's like, look, just let it go. Because then I obsess over it. And then it bugs me because I care about people and I hate to hear the way they talk to each other or talk to themselves. And it bugs the crap out of me and I start to lose my focus. So, but then when I get back in here and I let all that stuff go and hyper focus on this, none of that other stuff matters anymore. So journal every day what's going on inside your head, especially if the psychology has what's hindered your trade, because you need to put that on paper or need to be able to talk to somebody about it. And then you need to make some notes and you need to reference it tomorrow before you start your next trade day. You need to reference what you did yesterday and what you promise yourself you're not going to do today. And if you keep repeating the same thing every single day, you keep writing it and you say, look, you're repeating the same thing every day. Now ask yourself, what inside you drives you to repeat that same bad behavior every day? It's something else. It ain't trading. It's psychology. It's some trauma. It's some crap you got going on inside your head that is causing you to continue to repeat that same pattern of behavior. It serves you in some way. Find out why it serves you to be afraid and keep pulling out of a trade, keep doing this because you're afraid of losing or you're afraid of, you got some self-deprecating thoughts that you have, whatever. Write it down, make bullet point form about what you need to fix, and commit yourself to doing that the next day. And if it fails, commit yourself again the next day. Commit yourself again the next day. Reinforce it, highlight it, put it in color. Say, am I going to do this today? Yes. If you don't feel like you're going to do it, don't trade. Because you'll keep losing money. You keep losing money. And I'm talking from experience. You keep losing money and then you keep saying negative things to yourself. And then you spend, like me, I give trades by the dozens every day. And I don't take them all the time. I have to overcome a lot of thousands of trades, thousands of negative thoughts, beat myself up shit, angry, throw shit. Now I'm working on my own psychology, so I know what I have to do to help overcome that. That's my journey. And the fact that I can see this and call it like this is exciting now, because I just go, look, you're building more and more confidence and you're doing it in front of people, which if you want to build confidence, fail in front of people and go, wow, I'm okay with failing in front of you guys. It's not because I don't see you. It's just that I'm okay in myself because I know I trust this stuff and I get more and more trust in it. Then I start to do it live and I start to see results live and I go, wow, I'm doing it live and I'm showing them live. Wow. That's great. I want them to, and then I get more excited because I'm like, you guys need to see this. I want to share this with you. You need to see this, right? And if you study the algorithm, you'll see it. It'll keep paying off. This is bullish. I'm all bullish. And not because I've seen this. It's because we had reinforcement here and we've had nothing. We blew through that inversion on the way down. You've already reaped the rewards of this all the way down to the discount array. You've already reaped the rewards of even counter trending this. You even reaped the rewards of this trading down to the discount array. Right to it. I gave you all of that. Then all of a sudden it just said, okay, here's the reversal. You traded from one to the other. There's a perfect example of trading one to the other, also discount array, and then go long and you're just clipping coupons all the way up, all the way through this thing here, mean threshold. That gives way, look for the rejection block. And then if that gives way, keep going. And you should be moving your stop loss, your dynamic failing stop loss, or your fail-safe stop loss is trailing behind each one of the fair value gaps. Because if they fail on the opposite side, that's the reversal. That's the fail-safe. It's a dynamic trailing stop loss. It's a stop loss that's not fixed. It's not an R model. There's nothing fixed about it at all. It is as dynamic as the next fail-safe fair value gap. Sorry. It's as dynamic. So it's as big as this. It's as big as this. It's as big as a price rebalance. It's whatever size a fair value gap forms on the opposite side, or reprice rebalance forms on the other side. And you go, here's the rejection block. See that? You hit the rejection block. Did you take the high? Damn it. Did you pay yourself at rejection block? Did you pay yourself at rejection block? They say, no, I paid myself at the high. Ha ha. Okay, so you got your high there. Good for you. And you're moving your stop loss up accordingly. And that's one wonderful thing about that failsafe. It's as thick and thin as the next inversion that will show changing direction. This, you get excited. You love seeing that stuff. Big pump up above here. Watch that price just run now. You're just laughing. And you caught it right here. Everybody else is like, oh, look at that big wick that's forming there. 15-minute people are waiting right here. They're waiting for you to break that high right there. For that to be an inversion. They're like, oh, I can't wait for that break that high. Meanwhile, you're like, hey, I've been on it with precision, with a perfect entry down here. And you're still waiting over here for your entry to happen here, here, and here. With a stop, with a fair value gap below you. So now you're really going to be careful, because if it trades through that, comes back into it, that's a swing point. And that's a fail. Meanwhile, you've already collected all the way up. And if you see a fail up here, you'll see this fail back here, and you would have collected money all the time. These guys are waiting for their perfect setup. And I got no problem with it. I have no problem with their setup. But if you know how to compound your money, like Mr. Chris there, he makes $3,000 in this environment. Chris has made $3,000. How many people look at this and say, that's high resistance, that's crap? None of that makes sense. We have not been shaken off through any of that. We were bullish and bearish and bullish and bearish and collecting money all through here. All through there. Even that one, I love that. You break through that to the upside, you get one opportunity to get your trade off there, and you get to go long. That's one of those really smarty aleck ones. If you put your trade in here, if you're going short and you collected here and you go long here, if you're short there and you've come all the way back to that and you get out there and you see it run through it, you go, oh, good. Now I can get back on long again right there. So as I get out there, because I'm trading back from one array to the other array, and then it runs through it, you go, oh, great. When it comes back to that, I think I'll catch that long again now. Now you catch it long. You really didn't lose anything in your trade. You stayed long to there. You got proof that you're going long. Okay, I'm going to go back on long again. You continue your trade at no cost to you. No, that's really being on the ball. Buy, sell, stop taken by 0.5 points. You are welcome. That is awesome about ICT. You can be bullish while others are bearish. Yeah. And you can see how we can go bullish to a point. It goes bullish again and comes back, gives you an opportunity to get on. So in other words, you stepped off right here. You were going bullish to this reversal up here. You go bullish. You hit that reversal high and it runs through you. You hop off the bus. You go get yourself a soda. You come back and you hop back on the bus again and you go back long again. I love my metaphors. You stopped off, you saw that beautiful lady on the side of the road and you said, hey, I'd like to buy you a flower. You give her a flower and you sail off into the sunset. And then you go, who was that masked man? That must be Roberto or Fernando. You're welcome. Learning from ICT himself is very good, but having someone explaining and showing examples in live markets is priceless. Thank you so much, Darren. I am up 3,200 in the day. 3,200 in the day, Caesar. Just think about that. Just think about $3,200. And I just compare it to our friend Lewis down in South Africa. I compare it to our friend Simo over there in Morocco. $3,200. That is almost an entire year's worth of wages you made in one day for somebody over in Morocco. Do you realize that? Do you realize? Are you humbled by that? And if that's live money, I encourage you to share it, man. Let that flow through you. If you can make that kind of money in one day off of what I'm showing you here, man, help people out with it. Pay it forward. You're going to feel so much better paying some of that. Sure, pay yourself. I get it. Put some money in your bank. Protect your interests. I got it. But let some of that flow, man. Pay it forward. Money will gravitate towards you the more you share it. You let it flow. Terry Sullivan, I agree with Caesar K comments. Visual learner. Yeah, I'm a huge visual learner, and mechanical stuff. I take that after my dad. My dad was a body mechanic, and genius. You can put something in my dad's hands, and that boy can create. Yeah, I just see him weld stuff, and you see something in his mind. You go, "Oh, I could build that," and he just goes about building it. He's awesome. You give him a problem, he'll solve it. Mechanically inclined, I tell you, grade 9 education, but that man, he is so good with his hands, and he carves stuff. He's a carver. Oh, I have to show you this. This is what my dad made. Let me show you. This is what my dad made. Can you guys see this? I'm going to promote my dad's thing here. Look at that. Check that out. When I worked for Canmore Fire, my dad carved all of that. He even made the frame. He carved out each individual thing there. Fire EMS, 31 station, little helmet and little axe and stuff at top. Man, he's awesome. I love that guy. He's a genius. That's my dad. He's a carver. He's a good carver. Put anything in his hand and you can carve it up. He's awesome. Just a question. It is out of trading how you guys ask someone out if it is more stressful. Okay, just ask a question. It is out of trading how you guys ask someone out. It is more stressful than trading, man. I have less stress trading than asking my crush out. You know what, Muhammad? I totally agree with you, man. Do you remember when you had to cross the dance floor? There was this like that giant black hole. You had to cross the dance floor and ask her for a dance, and you're feeling the sweat running down your head. I swear the girls are over there saying, "He's coming. He's gonna ask you. He's gonna ask you to dance." And then they go, "No," and you go, "I've got to walk back through the pit of despair. I've got to make my way back there. I hope I've got a drink in my hand, and like." Hope the alcohol numbs the pain of walking back to your chair. Oh, women, you've got a painful way of killing a man. Just by saying, "No, I don't feel like dancing. Thanks for asking, though. But no thanks." You go, "Oh, sure, no problem." And all the men are looking, saying, "You're brave, buddy. You're brave, buddy. Good for you." And they're all sitting there going, "I wish I could do that. You got a lot of balls, man. Good for you." Meanwhile, you're just dying inside. You just got to tell her. You got to say, "Hey, look, you find something wonderful about the girl. Compliment her about something that she does really well. Don't give her false compliments. Oh, look, you're beautiful and all that." Beautiful women hear that all the time. Tell them something unique. Tell them something that you admire most about them and what you respect most about them. Women love to be respected, not just observed for observation pieces. They're not just items that are just there for us to stare at. They're human beings as well. They got thoughts. They got feelings. Just share it with them. Just say, I'm really impressed by this. I like the way you said that. Where do you get that idea from? Engage them in a conversation. And before you know it, they're like, hey, what are you doing for coffee? You know, oh, you're asking me out? Sure. I'm available on Tuesdays and Thursdays. After my session with ThetaWaveTrader, we're going to be doing something. Let me show you the ThetaWaveTrader website. Come over and pop in. Whatever. Yeah. Picture the crush as an inversion. Picture her crush like an inversion fair value gap and go for it. Ah, Tristan, you're killing me. Oh, yes. Oh, Tristan, that's good. You hit my funny bone. Picture it like a fair value gap inversion. That's what you gotta do. You just gotta say, I gotta get confidence. I gotta trust my line. Crush is the rejection block. Yeah, you gotta hope that you can make it to the rejection block. No doubt. Hey, Darren, what's your day look life after trading and streaming? Off grid. My day is I've got to go for a walk because I have serious back issues and I got a lot of shit going through my head all the time I'm trying to process. But I really appreciate you guys letting me share my stuff with you and listening to my stories, listening to me rant. This really feels good when we can have some good chats going on here while we're waiting the charts to do their things. I like to engage people like this, so this is tons of fun for me. So this is positive. And then I like to go for a walk. I try to get as much of a walk in as I can. I kill some zombies on a game. I do some basic household cleaning before my wife comes in the door. If I'm in my pajamas, I try to get showered and out of my pajamas before 4 o'clock, before she gets home. I like to do a little bit of cleaning if I can around the house. And then, I like to, and then the showers, my hair is still wet when she comes home. She says, why is your hair still wet? I've been working hard, honey, sweat. I've been sweating. She's like, yeah, sure you have. And, I like to do some drawing. I draw when I can, do a little bit of painting and do some drawings. And if you're on Telegram, you see some of my pictures. But I like to do some of that, and I want to get into some more gym stuff. But I've had 4 back surgeries, so you gotta be real careful about any bit of crazy movement. And that's it. My day's not really action packed. My wife retires this year, so we're going to come out and do some trading and traveling. We're going to do some traveling, hopefully get to meet up with some of you folks out there, share some laughs, and you guys get to see who some of these people are. And you're part of a community, man. This isn't just about ThetaWaveTrader. This is about all of us trying to make our way through the life and do the best we can to help each other out along the way. And people will say, oh, nothing in life is free. Well, I say bullshit to that. And everything that's free is not worth anything. If you can't see value in this, then unfortunately you've been jaded too much by that saying. Yes, some things in life are free. Michael's got it all out there. He's put it all out for free now. And we paid for it back in the day. You guys get it for free. And you get to come in here and see how it gets applied and how successful it can be for you if you trust in it. So that's the community I want to build. So long, drawn out answer to your question. Sorry. Off grid. Roberto. Hello, let me show you how to trade. Let me show you how to trade. Kenneth, be honest. Any relationship has to start with honesty. If she doesn't engage, she isn't for you. Totally agree. Totally agree. And it's a two-way street. The conversation's got to be two-way. She's got to be as interested in what you have to say as you're in her. And it's a peacocking thing, right? You got to puff up your, show her what you got. And what you got is interest in her. I tell you, a woman will blossom unlike anything you've ever experienced before if you just show them love. And whenever I used to do counseling and stuff with people, I'd say, imagine being in a relationship where you could, all you wanted to do was make your partner happy, and all she ever wanted to do was make you happy. Wouldn't that be an amazing relationship to be in? That your focus is on her and her focus is on you. And I thought, wouldn't that be a dream place to have? And I've said it so many times. I've actually manifested it with the woman I'm with. We literally want to do things for each other. We just want to make each other happy all the time. And if one of us is not happy, we want to know why and how we can fix that for them or help them through it. The weird thing is that what I didn't anticipate is you end up getting to that point where you go, what do you want to watch? I don't know. What do you want to watch? Whatever you want to watch. Yeah, but what do you want to watch? Well, whatever you want to watch. I just want to be happy. You watching whatever you want. As long as you're happy, I'm happy. Well, as long as you want to watch what you want to watch, I'm happy. I'm like, oh, for God's sake, let's just pick something, because then you laugh and you pick something. Same thing when you go out for dinner. What do you want to eat? I don't know. What do you want to eat? I just want to eat whatever you want to eat. And you never get a decision made. And you're like, okay, I'm going to make a decision today, and I hope that it's okay. It's something you want. She goes, well, I'll take whatever you want. And great. Tomorrow you have to make a decision, and I'll be happy to take whatever you want. And we've been together for 10 years. And I just adore that woman. She's always there for me. It's my best friend. She's my confidant. She's like my soul glove. She just wraps around me. I just fit perfectly inside the soul glove. Everything about her is just awesome. So, yeah. And it all starts, and she had so much patience. You think you're a guy with ADHD, paramedic, firefighter. I was just on adrenaline, just rushing, back and forth. I was all over the place. And she comes in with so much kindness and caring. That's that teacher. She's a grade 2 teacher at the time, and a vice principal. Now she's a principal and a grade 5 teacher, all in one. And she just comes in with kindness all the time, kindness. She looks at joy, always looks for positive things. It's humbling to be around that kind of beautiful person. Lucas. Hey, Lucas, we got somebody else out in Vancouver there. You guys should meet up. Well, Roberto, honest relationship. I think maybe the week you're off, you should just have Dr. Laura come in and help us with trading psychology and dating. Yes, I should have a special guest come in. Yes, this week's trading will be sponsored by Dr. Laura. We'll be talking to you about all your trading and psychological and relationship issues. Terry's like, we get dating lessons as well? Hey, man, we're like universal soldier. That's the one thing I've always wanted to be in life, was the universal soldier. Something that I can do, put my heart to something, and I will figure it out. I will try and do the best. You know, I may not be the rocket scientist, but I'll be the first one jumping on the rocket to give it a run. Here's your reversal. You see that reversal happening? Body's traded below it. Back into that range, lower candle. You've got the high taken. There's your reversal right there. Body traded below it. You literally came back and tapped it. You're in like instantly. You see that? As soon as you see it coming down there, you put your buy order in, go instant execution. Poof, you put one in there. You're in. Look for your pull your fib tool. Even if you pulled your, and you got to be fast, obviously, for this one. It's almost too fast for you to get in. So you're almost in right at your entrance. 50% right there. Pay yourself. 62%. Move to break even at 50. If it comes back and taps you right now. Nope. If it runs through 62 to 70, pay yourself at 62. Or pay yourself at 70, move to 62. How close you were to getting taken out. Here you go. There's 62. Pay yourself. Coming into this discount array right here, 70%. Come on down. Give it some loving. Give it a tap. Tippy tap it. Come on. Right there. Bang. Now move to 62%. Go here. Tap the 75 and go to 70. This is how you really get in tight because now you're right on the breaker. Ah, good. Now move to 70. Oh, move to 65. Boom, you're out. You collected all the way down. Stop loss, stop loss, stop loss. You moved it all the way down. You leave a piece on for rejection block. 88, move to 77. God dang, that's a good one. Now if it turns around and comes back up again, great. If it blows, see how you ran through all those arrays on one candle? Loses strength now. It's been eaten around, so you may come back up into a 50% of that range, and there's no real up close candle except for that guy there. We have a little tiny rejection of fair value gap right here. Let me get this out of your way now. See how you quickly, even in that bullish trend, you paid yourself right there because of that reversal, and if you were quick enough and you could have caught that, you could have paid yourself really quickly right there. Stop loss moves in instantly. Within 1 minute, your stop loss has gone from risking 1% to you're in money, in money, in money. You're just pulling your stop loss down to quickly manage it there. We didn't have to worry about take profits or anything. You quickly pulled your stop loss in behind you. And you kept paying yourself, paying yourself, paying yourself as you go. That's a quicker version of the same thing that happened on the daily, by the way. That happened on the daily right there. You got in, you went, I'm going short. You paid yourself all Monday and all Tuesday at the specific points. Throughout the day, you paid yourself, and then you moved to the sidelines. That's a daily candle, hourly candle, whatever you want to call it, folks. It's the same damn thing. It's fractal. It happens everywhere. Well, I'll be right back. I have to pee. My coffee's going right through me. The markets will move now. Derek, take over. All right, we're back. Here's a picture I did of a koala. I don't know if you guys can see that or not. There's a lag in there. I don't know if that's actually showing up or not. If you guys can see that. Anyway, that's a koala I penciled in. It's in that's a print version. I printed that, got them printed up back in April. Anyway, that's a little bit about some of the art stuff I do. All right, let's get to it. Wow, there's some huge delay in that. All right. Mohammed says, I gotta go. See you. Thanks, there, guys. I go for it tomorrow. There, one-stop shopping. Bacon and eggs time. Telegram, yum. Ready for the PM session. Your journal is YT videos. ICT disc jockey. Minute by minute by minute by minute. The Doobie Brothers. Minute by minute by minute. Oh yeah, I remember that song. theme song. I'd love to play that, but I get a copyright infringement hit for sure if I hit that. 30-second delay. Wow. That is quite a delay. Sorry about that. I'm going to try doing something here. I'm going to see if I can adjust something. Stand by. Let me know if this works. I think I have to go here. And then I have to go stream latency. Oh, I can't adjust that latency. I was hoping I could adjust the latency, but I can't on a live stream. Yeah, not much you can do there. Do the reversal. Did you pay yourself at the rejection block right there? Perfect. Come all the way back up inside it again. Buffer. Are you paying yourself over and over again? Taking the same trade, repeat, rinse and repeat. Same trade, rinse and repeat. Start all over again. That's the buffer you're building yourself in case it rips against you and it doesn't cost you anything. Look at that right there. You get an opportunity to get in again. As soon as you get to rejection block, pay yourself again. Boom. Opportunity. You paid yourself. It came back. You took another trade. It paid you again. If it comes back up there again, collect again. Man, oh man. I see this over and over and over again. Let's look at the World Cup Trading Championships right now, folks. We've been looking for these guys. So this is March 25th. Look at all that. We got a nice mixture of people in here now. Look at the Italians just dominating over here. First quarter championship, Forex. They're just killing it over there. That's great. And they're leading. The Canada's out of the... And so is my buddy Darren there. Darren and Dave. They're out. But our buddy Dave Barry there, he's actually going in under the alias of Dave Barry with an A instead of an E. He's up 128%. Aren't you, Dave? No, he's not in here with us. let me get back into my... I'm looking at Bitcoin saying, oh man, I see so many trades on Bitcoin. It's just, look at this swing point here. Entry, get in. Look at that, kabam. Like kabam. Look at that entry. Even the perfect entry right there was zero drawdown. Slammo. From there, you're looking at 7,000 all the way down into 68,000 down here. But even if you went to this next, wherever the next reversal happens, wait for there's the next reversal. It happens. Do we get above it? No. You're still short. To get above it? No. 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 Here's swing point, reversal right there. You get above it, you're out right there. So perfect entry to a perfect exit right there. Even if you decided to wait here and then it came back to you there, you got out. 68,009 to, that's $1,000. $1,000 it dropped for a perfect entrance, perfect exit. Dang. And it never traded above there. You see that? Bodies never broke it. That was your upside run, and it didn't take it out. Just, you guys, it's there. It's right there. It's there for the taking, my friends. It's there for the taking. What is your setup? That's just a one setup we see over and over again. There's your exit. Body, look at this. Oh my, shall I zoom in on this? Shall I zoom in on this? Look at this one. We have a reversal right here. Above an old high, reversal, body. We wait for a body to trade below that low right there. Trades below it, and you go, oh, right there. Perfect entry. Perfect entry. And that's at 71,400. And you don't get to see the upside gets broken until right there. And you're scaling out all the way down into these old lows here. And then it turns back against you. Finally trades out. There's your stop loss taken. It ran all the way through and took your stop loss. And that was all from a perfect entry there. Again, at 71,400 all the way down to, you took profits down in here. But if you didn't, then it just came back to your stop loss. 70,004 or 550. So 100 and some odd handle. No, 1,000. Was that 1,000? Yeah, 1,000. There's another $1,000 all the way back to there. But you paid yourself out all the way along there. Reversal. Here's the reversal. Body breaks the high. Come back inside. Hello. You're catching it all the way back up again. Here's a reversal. Body breaks below it. Come back inside it. Hello. Running all the way back down to rejection block. Did you pay yourself? We have a reversal. Trade up above it. Do you get back inside it? Yes, you do. Trade all the way back up into a premium array. Hello. Come on, people. Come on, people. Can you see it? Can you see the joy that I'm trying to point out? Your journal is YouTube. Yes, this is pretty much our journal. I get to bare my soul to you folks every day. Every day. Can you trade Bitcoin on Friday? You could trade Bitcoin every day, my friend. Every day. There's no rule that says you can't trade any asset class at any time. All the time the candles are moving, you can trade it. Did you get in on this short? Like, oh my goodness, look, what the algorithm said to you. Look, I'm going short right here. Bang. I give you an opportunity to get in. Bang. I give you another opportunity to get in. Bang. Like, how many buffers do you want? Look at this. Buffer, buffer, buffer. All they kept running to these rejection blocks. And you get to buffer that whole damn thing. Pocket your money, pocket your money, pocket your money. One more time, slam through. And you only ever risk that 1%, and you moved to your PD array to PD array over. Back to the breaker. Look at the range you're in. Pull your fib tool in that range if you want, and pull your... If this is the range you're in, 50%, pay yourself there. Pay yourself there. Put your stop loss right there. All that's profit right now. And if it goes to 70, move to 62. 75, move to 70. Well, we'll leave it to sit there just so we can entertain ourselves. Where's our carrot? Where's the damn carrot? Let's put the carrot over here. Let's give it, there's 75. Move to 70. Your stop loss is right there. Bang, you're out. You're out. It took you out. Full profits all the way down to there. You scaled out multiple times using your fib tool all the way down to there. You scaled out right there, a piece right there, and got taken out there. If that continues through, you got to be okay with that. Don't hate me because it's beautiful, folks. Don't hate me because it's beautiful. It's just the algorithm. Mate, is it possible you check Dow if I could not find an entry for it after sweeping low for longs? Oh, okay, yeah, I could do that. The Dow. Let's look for a swing point. Let's open this thing up. Right here. See that little tiny spot right there? Where's that in your chart, Mohammed? Where's that? You've swept the low. You've got a gap. Body trades above it. You don't get an opportunity to get in on it there. So what do we do? What's the rule? If we miss this, we go, that's okay. I just wait. I look for a breaker. Where's my breaker? Right here. This down close candle. Are you catching what I'm about to dish down to you, my friend? What I'm about to dish for you is this. Right there is your breaker. As soon as we trade a body above that breaker, from wick to wick, we trade our body above that, I'm getting in. So here's your opportunity. You either go 1, 2, 3, all the way down to the bottom of the wick. That's the range that you can run back into. And you run all the way down to the midpoint of it, which is also just the breaker. You trade off that breaker there, give it some wiggle room, and that's your entry for your long. And you're trading back up into order block here. See that right there? Draw it all the way across. Also the top of your fair value gap. If you just draw that out as your exit point, pay yourself there, because when you see this smash back on you, you go, oh, why didn't I pay myself there? Why did I aim way up too high? Why was I aiming too high? Pay yourself, people. Pay yourself. Or as soon as you get your entry, pull your fib tool to your 50, 62%, and just keep using the fib tool to trade, to scale you out. That's another method. Whatever your method is, pick it, stick with it. But that's your... Ideally, that would have been the entrance to get, had your body traded above it and you could get back into it. You could have had it. But if you miss it, who cares? Wait for the breaker to get broken to the upside. So you can either use this one here, because we have a swing point. Instead of that breaker, you could have used this one. Right there to there. That breaker, because it's the last up close candle before a run below this low and that low. So body trades above it. Wait for it to trade above it right there. It returns back into it right here. And then you go long. So I gave you the wrong breaker. I took that one as the overall breaker. It's not. There's a swing point right here. This is the breaker. So there's your body above. Come back inside. Trade. Aim for rejection block high. High. Here. Here. And here. So if you got 5 lots on, you'd be like 1, 2, 3, 4, 5. Done. If you got 6, leave one on to see if it works. If it runs, great. Aim for that order block right there. That should be 1 point, another point, another point. 3 different arrays inside there. You can see how you can hit them and reject off them really nasty. You're going to see these arrays are important. And if you understand and you see where they're aiming for inside the range that you're in, that's a premium breaker right there. So you went breaker to breaker, discount breaker to premium breaker inside this range, from that swing point all the way down to here. Breaker to breaker, discount to premium, all the way back down. What did this hit? All the way back down to, I guess this would be the parent breaker of that little run here. But all the way back to this old order block, old highs, all these old highs again. See that? Equal highs. Come back to the equal highs right there. Pull back up, come back up to rejection. You may not catch those, that's okay. Just watch and say, what did that come back to? What logical area in here? Oh, draw through your candles. There's some equal highs sitting right there. Our cam model people are going, it's a cam model. I take my cam all inside here. Body runs up above. If I don't, this is my cam model. I don't care. You trade it above it. You come back inside it. Cam model 1. Buy here. Start scaling out. The cam model people are in the races with you. Okay, so you could draw your cam from that high there to that low. Let me just do this for you so you understand what the cam model is. You may have a broad, wide cam model like that. And as soon as the body breaks above it, right there, comes back, taps it, go long. Slam that sucker right up against the bottom of that right now in case it comes back against you. You're aiming for here, aiming for that order block, low. Mean threshold, rejection block, old highs, this one, this one, this one. Pull your fib tool to the next high, from there to there. If you've worked this one already, pull the next swing point, which is right here or right there. Pull the whole thing, wait for 50%, scale out, do the same thing on the way back if you want to use your fib tool. Hope that helps, Mohammed. NQ is selling off. I look at this and I go, ooh, what's a nice little rejection block to come off of here. Pull your fib tool here now and start looking, checking out your range, looking at your PD arrays. If you're going to come back into your charts right now, you say, ooh, if my bias is low still, and I want to finish off the day with this big tear down in the afternoon here, coming back to 50% of that range to get short off of that. There's a reprice rebalance right here. We can treat this as a fair value gap, come back up inside that, come back to these old equal lows. Cam model 1 entry for a 62% retracement. Look at that, right on the cam model 1 entry for a slam down for the next price leg down. I would take that just because it's up in a premium and I'm not going to risk a discount and it rip all the way through on me. So I would take a cam model 1 there. And you can actually put a cam model 1 right there. And I'm putting just below to allows for the spread. And put your stop loss just above the 50% of it. If it digs that high into it, then I wouldn't expect a cam model 2 here, especially if we're going lower. We're just coming back into this consolidation to go short. Here's your trade long right here. See the reversal? You've taken out these lows. Reversal. Body trades above. Trade back into it. Get long right there. You're in a long to 50%. Stop loss trailing up behind you right now. Make money. Don't just let it sit here right now. Make yourself some money. Move to just above here so you're in profit. So if it rips back against you and this is a price leg down, you didn't lose it. You're counter trending something. You're still making money in a counter trend. You see that? Did you guys catch that little reversal there? And there's your opportunity to get in long. back into what level. We got a big old cam model sitting up here. We've got a fair value gap sitting in here that we're eating into. Pay yourself, pay yourself, pay yourself, or move your stop loss up, move it up, move it up. Every time it makes another stop loss, move to the one behind it, move to the one behind it, or just pull your fib tool and do it that way. As soon as it hits 50%, like right there, bang, you just paid yourself a big chunk of change. You move your stop loss right up behind that thing now, wait for 62. Do you see this? It's just rinse and repeat. How many times have I given these kind of entries today? Optimum trade entry for a short. So we're looking for a cam model 1 entry here. So if you hit the 62, slam that sucker right up against your 50%, that guy's profitable and you made money all the way inside here. So NQ is not selling off yet. It's bullish. So Caesar, when you make a statement like it's NQ is selling off, where is it selling off? Where's the proof it's selling off? No, it's going bullish. It's not selling off yet. Wait for your setup to say it's selling off, because if you're looking at an overall perspective and you see that big bull candle down, you say it's selling off. Yeah, it's a good guess, but you want absolute confirmation that yes, now I'm selling off. I agree with you, but now I disagree with you because I think we're bullish, and we're bullish until we see something prove to the opposite. There, I'm in my Cam 1 model now. So you're long, you be out of your longs now and you can go short. Or you pull your 50, you've hit 60, so now you're pulling right up to 50%. Your stop loss, that was break even when you hit 50. You're going to go right to, as soon as it hits 62, if it hits 70, then go straight up to 62 and say make even more, because it can turn any time here. So trailing up your stop loss as it gets tighter and tighter for the more opportunity for it to spin around, you're snug in that sucker right up behind you, and you're going to make some profit. So there's a cam model 1 right up to the body. And I'm in a premium array, so I don't mind selling at a premium price, buying it back at a discount. So it's got to go through a lot of shit in here in order to rip through and take me out. And those have gone long. You go long on all the way up here. As soon as it hits 70%, move your stop loss to 62. Right now you're studying at 50. We're in a breaker right now. See that? Just hit the breaker. Great place to get yourself some money out. If you didn't hit your 70, take a piece off there. If it comes back to 62 now, collect your money and move to the side. You just made some money in here. Just in a retracement, counter trending something. We're expecting it to go shorter. But right now I'm bullish. We're still bullish till proven otherwise. Even though I'm in a short, I'm saying this is still bullish. So ideally, now that we've traded above this, we're still going bullish. We're still going bullish. See, the body traded above it, came back to it, gave me an opportunity to get out, and I didn't take it. If you're a Cam 1 model and it's traded above you and comes back to you, get out, wait for your Cam 2 model. I'm just leaving it sit here because I've got some faith that I think this wants to come down some more. And if it takes me out, I don't care. That means that mean threshold of that breaker's given up. And it's run all the way back through all 3 points of that breaker, and that's not a good sign for me. So you see how this was a logical place for you to unfold your charts. If you're trying to squeeze more juice out of this, and you're in an optimum trade entry for a short right now, and that comes all the way back and takes you out, and you got greedy, and you were trying to aim for all this stuff up here, inside that big mess, it might make it. You might get it. But if you don't, you've missed out a perfectly logical place for it to scale out. And 70, you should be sitting at 62 right now anyway, because you just hit your 70% if you're using your fib tool. Now you're break even. Now you move to the sidelines and say, I just made some more cash right in here in a counter trend on the overall bias going down. I made money right there coming back inside this because I saw the reversal happen right there. I got in with a perfect entry. Like your drawdown was like less than a handle, maybe one handle. 0.75 of a handle was your drawdown. And the moment it broke that high, slammo, you're like in that drawdown for less than a second or two. And within a minute later, your stop loss is at break even or making money. And you're scaling out at 50%, blah, blah, blah. Now there's your 75. It's already come back and taken you out here if that's what you're using. There's like a really good optimum trade. There's 79%. There's the mean threshold. If that gives way right now, I'm done. We should not even have it trading up that high. See how I mean by there's your opportunity to get out right there, because we're going to go higher. There's the mean threshold. I don't want that to go any. I'm literally letting it squeeze. So now I'll take this and I'll say, I do not want you to get any higher than that. So now I'll move my stop loss to there. So I don't want that mean threshold to go anymore. I'll move my stop loss to mean threshold. As soon as it gets back into here, I'll move to break even. So now no longer 190. Most I'm going to risk is 70. Mean threshold of that candle, I don't want it. I want it to just come up, tap it, and go. I don't want to see it digging all the way back into this one again. I can come up and tap it. Right there. Now I can go back down. It's like I'm telling it what to do, hey? Now I'm going to move to myself to break even. If it comes back and takes me out, I don't care. That's watching array to array. Now I expect that to keep coming back down now. Get back into here. Pay yourself at a piece right there. I only got one on there. Oh, I had a big white that opened up, came back, took me out. Didn't cost anything. Fun little bit of price action, zero stress, right? If it's live money, again, it should be zero stress on that because you're watching array to array. So now I think this could be a potential run even higher yet. So when do we get our proof that we've changed directions? We got to get below here. And there's nothing, no swing point. So I still don't give this a lot of faith that we're not going to go higher. We're still bullish. If we drop below this, yeah, we got bearish back into a range here that you might want to just revisit that one more time. But I don't have a swing point above an old high to really key off of a reversal pattern like this, right? We went above an old high, reversal, tap into it, go short. This one here, we don't have that. We haven't swung above an old high, so this doesn't have a lot of validity for me. I like still bullish. I just want to see this provide a level of support now. So if we look at removing and here, you want to see that provide a level of support. It can dip into it to back to the order block. You're into the middle of the equilibrium of that range and then push up for the next price leg higher. So still not bullish or bearish yet, Caesar. Still not bearish yet. Basic order block, sure, it's valid. You've tapped it now. You want to see that rip through that. Supporting optimum trade entry short. That's some padding you got on it now to go short. You want to see it now, just start going. You want to see it blow through here. If we get through that, come up the underside of it, then I'm turning more bearish. And if we get below this one, I'm really bearish. Then I'm in. Then I'm on your side there, Caesar. Then I'm going to change my mind and say we're going bearish. So if you've just come back all the way up to here, you've taking your profits, you trailing it up with a stop loss. It just worked beautifully on the way up. You got out at 62%. If you trade below this and come back into it, it is a potential short, but think about the range that you're in. Trade back into that guy there and wait. You're in a tight range here for profits. Mean threshold. Close below it. Pop back into it. It makes me bearish inside that range, but not bearish overall. Ugh. And what Canadian doesn't like bearish, grizzly-like grizzly-like bearish? Yes. Yes, indeed. See how we've come back into the mean threshold and we have not closed below that fair value gap there? It's still not an inversion. It's just a reclaimed fair value gap. We want to see it close below that. All it did was just come back and tap the mean threshold of that candle. Now this would be a great place to do another price leg up higher. I think I'm going to kind of wrap it up here. It's been, we're looking at 130. So you want to see some, if this is going to go bearish on you now, you want to see some momentum. You really want to, there you go. It's closed below that now. Come back up and tap it. You'll remain bearish inside that range. Eat through that order block and continue down to a discount array. And we have this guy right here. And it's a mitigation block because we did not take out an old high with it, you see. So mitigation, not a very strong candle. Look at that mean threshold still holding price off that propulsion candle there. Now we're above that candle. So if we close above here, you go bullish again. Then that's the reversal. Anticipate the next price leg up higher into here and here. There you go. See, open it, closed on top of it. Open. Now you're bullish again. Change your mind. Back to this order block. Mean threshold hasn't been given up yet. So if we go here, mean threshold, then finally give up the ghost, come back to mean threshold here. You're inside that range. Oh, man. Now you'll go bearish again if it trades below this. Actually, it's closed right on it, hasn't it? So you're still bearish until that closes above. I'm inside this range here now. I see this one and this one. See the swing point here? Order block, order block. If I only come up to 50% of that range from there to there, what's sitting in there that supports a 50%? Nothing. I want to see it get right up in here into premium array. Inside this range here. There's your premium array right here. Bing, you just tapped it. So now you want to see this drive through the mean threshold, and there's your new price leg up. If we close above here, look for the price leg higher, and look for what we're talking about up here. See how the body closed above it right there? So if you're wrong, if you're going short, there's your fail safe. You go up, open, come back, give you an opportunity to get out of your short, and if you're really smart, you go long right there. To go long. It's the same as right here. If I was going to go short and I went in right here and it failed me and I was going, oops, I'm wrong. get out there, you could be, if you caught this on the way back down, you could have got out at the mean threshold and took your stop loss really tight here. Reverse direction, go back the other way. If you were long at that point and it came back to you here and you went long and it traded below, you went, crap, I'm on the wrong side of this. It came back in, took you out. You're like, oh, I'm break even. Oh, now it's going back long again. All right, now I'll get back in right there. Go back long. So you're broke even, get on the right side of it, go back long. You're on the wrong side of it, it traded back up through you, you can get back out. So that whole break even thing works great when you put it in on the opposite side of where you want to go. That's the best optimum entry. Again, the fail-safe on the weekend explains all that stuff to you. There's the mean threshold of that candle again. There's your premium. Remember I was talking about, that's the range I'm sitting in. Mean threshold right there, perfect. Hits it perfectly. So now here's the range you're in. If that candle closes below here, we've got a new swing point, and you've got that candle and that candle. See how they're overlapping? You're stuck. So you've got a premium array, which is a fair value gap. You want to see that provide a level of support back into here. So you're inside this range, you're trading inside order block to order block, really tight. Do you want to trade that? Hell no. Most people don't want to play in that kind of range. Can you show how you make your templates for 1 minute and so on? Yes, I can. Let's say I go like this. I want to make a, well, let's do a text one. Enter here. Okay, I right click it. Oops. And I go, see how you put it in here. Enter here. Pick your color, pick whatever you want to do here. Then go template, save as, and then go enter here. That's my enter here one, save. So, okay, next time I want to go into, let's remove this. Now if I say, oh, I want to go template right in here, and I want to go right there, and I want to make that, I right click it, and I go, oops, you have to say something first, I suppose. Take, you can put whatever you want. Right click it. Sorry, right click it. Template, enter here. Bing. That's how you make your, and then so whenever I do that for a fair value gap, I'll go like this, right click, template, and I made one for minutes, weekly, hourly, and they're all in there, and they're all color coded according to my color codes. And if you want to know how the color codes work, I go like this. Daily are always blue, weekly are always gray. I think this is red, reddish. One of these is red. This could be red. Red color is monthly. Then you can go 4 hour, 1 hour. Green could be 15-minute. This could be 1 minute chart. So, and then this is be like fair value gap, inversion, price imbalance, gap. You can have those all set for whatever you want to decide they're going to be. And then when you're in there, that color would be like, I go here and I go, that's a 1 minute inversion. So, and it says 1 minute inversion in it as well. So not only does the color give me a reference, I'm a very visual guy, so I like to see that that's my 1 minute inversion fair value gap. And if I have a big blue bar coming through the top of me here, like sitting up in here somewhere, then I know that's a blue bar, and it will say that's a daily fair value gap that's above me or an inversion. I look over here and go, yep, I'm approaching that right now. I can see that on 1 minute. So when you put this on, you make sure you put inside visual on intervals, and then you can put all interviews, just this one alone, or from this one below, or this one above. You can decide where you want this to appear on your other charts. Making your templates. Oh, I got itchy palms. What does that mean? That means some money's coming my way. itchy palms. So you see you're in that consolidation. See how that rejection block got hit again? Tapped it perfectly. You did not even get the lows that tight. Those lows still didn't get taken. It came all the way back up into a premium array, and you went rejection block, discount to like array, rejection block right there. Like array to like array, like array to like array, inside consolidation. And you come all the way back, and now you're literally stuck in this candle and that candle. They are overlapping one another. You're stuck in between them. You're at the extreme of your arrays. This needs to expand. It needs to get out of here. So the only thing it's got left is the mean threshold of this one. And then it's got to go into the ranges above. And it's already at the mean threshold, already eaten through the mean threshold, this one. So it's going to come into here. And then it's got to go, oh, I got to get out of here. I've got nothing else for me to play with. And off you go. Did that help, Mats, with the template? Again, just to review. Once you have your settings, decide what you want to have for your text. Go down here, hit Save As. You get to name it, and you get to create whatever you want. It saves inside that big list there. So every time you build a new one, you just right-click it, hit your template, and it's all available for you right here. And it saves you having to retype it in all the time. You just right-click, bang, and you can just drop them in like crazy afterwards. That's why I love the templates version. See how the mean threshold right there is hit again? Come back down. You're inside this guy now. They're literally overlapping themselves, and these candles are getting smaller. Now it's saying, I got to get out of here. I got to bust out of here. Mean threshold to mean threshold. Now I've got... If you watch these candles, I tell you, if you study price action and you start seeing this, you can literally watch every candle. You go, okay, now I know it's got to go somewhere. It's got to bust out of here. It's got to expand lower or higher. Then you ask yourself, what's got the smoothest edges? That needs to, which one is jagged? Which one's smooth? Which one's more likely the one I want to run for? If I was the algorithm, which one would I want to take a run for? Rejection block again. Right there. Now run through them, take them out. Make them go jagged. If they go smooth again, you go, great, now what order block's above me? Right here. There's a little imbalance right there, right in through the mean threshold. So if this gets smaller, and we just came down to the rejection block again, come back up to order block. See how this is compressing, smaller, smaller, smaller. You got to blast through this now, rip through the trend line phantoms that are just holding a trend line on this, and they're taking their little freaking pendant patterns or whatever bullshit they're using, right? So this is oh, it's going to bust through here. Well, if it does, expect to run back up into here, or at least these rejection blocks up here. The phantom people are like, or trend line people are like, no, it's going to continue coming down. Look, we're in a nice trend. And it may just do that. And they may say, you don't know what you're talking about. The trend line has worked. The glorious trend line. What did I say it would come back to? That order block. See that? Bing, hit it. Now it's coming back down again. We're running out of arrays. You got to expand. You got to do something. You seriously got nothing left. It's coming back one more time. It's touching the rejection block and saying, I do not want that. I want retail to think that this is the floor. I'm going to build up. I'm going to engineer some liquidity here, and then I'm going to rip through you all. Yes, sir. I will try it out. I can't even remember what it was you want to try out now, man. But if you got it, good. I'm happy for you. Do you think it is banging into the bearish breaker on the 1 minute? Do I think it's banging into the bearish breaker on the 1 minute? Bearish breaker on the 1 minute. This one right here? No, that's not, yeah, I guess you could say that's a breaker if it ran that little high there. See how the mean threshold is gone though? You're banging. You're off this propulsion candle. That's propulsion candle is the only thing that's holding up price right now is right here. See that? Right in the mean threshold, right in the line of the sand of that thing. It's holding price, trying to keep it propped up. But that's all going to get taken out eventually. I'd love to see it just go ripping through all these guys who are trend line phantoming it here and just smash through them, get back up into here, then come down and clean this out. This is all engineering liquidity on the sell side to go higher, have people thinking that this is going to shoot up. And our consolidation people go, I don't care where it goes. If it goes up or down, I don't care. I'll grab it, and I've got lots of places I can start taking profits at if this goes higher. Order block validated now, right? We have to break out of here, so validate the order block, create a fair value gap in that. I would like to see one come up higher, create a fair value gap, clean out some highs. That would become the inversion for a swing down. I want to see that just big bold candle, rip through these guys, create a fair value gap, and then rip all the way back through. That's what I want, and that's what I'm going to get, damn it. Back to this. We're broken above it again. Find support. Go long. Go short. Go long. Go short. Long. Off this. Now you're long again. So they've engineered this down here. Are they going to quickly snap through it, come back and close above? No, we're still back in here again. They ran rejection block above, old highs and rejection block inside that breaker. Order block to order block. See how we've just been inside this thing? Now you're into the rejection blocks. Rejection block. Finally, you pop through them right there. Boop. Now, if it pulls back into the range again, you got that candle. See how it just says, I'm running out of arrays. I've got to extend. I got to get up higher, reach into some higher arrays, and come back into that range. I got to reach to the lower ones because I've run out. I've eaten through all this, all the mean thresholds. I've done the rejection blocks so many times. And they're so tiny. I've got to pop through them and collect up something here. Now go higher. Just think like an algorithm. What would I do if I was an algorithm and I was hunting for liquidity and I'm inside this range? Where's the obvious place that I would hunt for liquidity for? Where's a nice discount place? Where can I engineer in some liquidity and get people to think this is the floor? Come back and just clean them out, then start marching higher. Okay, that's it for me. I think you guys have got a good idea of array to array, discount to premium, blah, 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 all day long. I need to go for a walk. I've been sitting there in this chair for 3.5 hours, 4 hours now. I love you guys. Thank you so much. I'm so happy for all those of you who made some good demo dollars today. And you get to take your girl out for a demo date tonight. And Mohammed, ask the girl on a date. Be kind, be a gentleman. Be respectful. Take her out on a date, my friend. Do it. Inversion fair value gap. Go for the inversion fair value gap. Until tomorrow, my friends, I will see you guys. It's been mucho fun. And I really appreciate you guys spending your time with me. I know you have lots of options out there. We're at 578 people. Do you see that? We've gained 78 people since we hit the 500 mark last on the 18th. Unbelievable. We're growing like crazy. There must be some value in it. There must be some value in it, my friends. Thank you again. And those of you who aren't on Telegram, pop over on Telegram because some of the stuff we share is exclusive in there. You get to play in another free site. Sorry, it's more social media. But that's the place we go and play after the fact. And if there's some ideas we want to bounce off each other, that's the place you'll find them, and we share them in there. And then if they start coming to fruition, you'll hear about it eventually on here. But until then, thanks again. We're going sideways, so I got nothing for you. You keep looking at your arrays here. Keep studying. price. Don't give up on this. Stay on the horse as long as you can. If you get bucked off and you're like, oh, I thought that was going to go down and it threw you off, hop back on the horse and get back in there. This is a great opportunity to keep playing. Keep playing. I'm going to turn the carrot over here. Anyway, I'll see you guys tomorrow. All the best. When that's the last, we've got 2 more days left, and then I'm off for the week. So take a break. Enjoy yourself. Love you guys.